and it kind of depends on it's more about the stocks underneath that than the yield. But so we think we're closing in on somewhere near a near-term bottom here. We're staying defensive, but we're getting ready to get a little more aggressive if we can see levels below.
I'm sorry, folks. Worldwide, I think we can state that Steve Auth has taken the Bramo Kool-Aid, and I mean, I'm sorry, Lisa. He's sort of got the. He's got the Bramo energy going.
Yeah, he's got the sort of depressing, gloomy view of the world.
This is not appropriate, Steve.
Well, Steve, this is actually important,
this is Camp Lisa.
And of course, I think so. Okay, well, being in Camp Lisa, I will say that it's not just about where we are; it's about how bad the recession will be, and that's. Well, that's going to be later tonight when we have a drink. But I do wonder whether we are looking at possibly, yes, a hard landing, but that actually means a softer recession that gives people conviction in the short term. Is that twisted, or does that sound right?
Well, I think a hard landing is just hard to get, Lisa, because the banking system is way too strong. So you're not going to have a big banking crisis that could cause it. We've got so many job openings. We're already seeing it. Instead of seeing layoffs, what we're seeing is slowdowns in hirings. And we've got a lot of slowdown in hirings to go before we can get job openings to be anywhere near job applicants. So it seems like there's a lot of room for steam to come out of the economy before you start getting big cutbacks. Even the consumer still has piles of cash. They're going to slow buying, but the idea of them actually stopping buying and causing a recession seems unlikely. So we're more really into the rocky landing camp than a recession. I think recession's just tough to get now anyway.
Steve Auth, could we get the nominal GDP call wrong? If we have an inflation size and a real GDP, actual growth size, can we get a better nominal GDP that cushions the Authian gloom?
Well, I wouldn't call it gloom, Tom. I mean, that's kind of where we are. Like we've cut we cut our GDP forecast for this year to 2.6. We cut our forecast for next year, real GDP, to 1.6. So rocky landing. But nominal GDP, we've got it 7 and 5 the next 2 years. And I think that's probably conservative. That kind of gives the Fed a lot of credit for getting inflation at least down to 3 or 4%. So you add that up, and if you have companies that broadly participate in the overall economy, a lot of these defensive areas like telecom, consumer staples, utilities, they're going to grow their revenue base on a nominal basis, mid-high single digits. And yeah, they can have some margin compression, but it's really hard to actually get an earnings decrease off of that.
Okay, folks, it's Thursday in May. You've blown up your portfolio. It's now time for Auth 101. Steve Auth, explain the dividend growth trap of how you're a pig and you go out and you buy a 4, 5, 6% dividend, and that's not dividend growth.
Yeah, I mean, you can, you really got to be, I don't want to advertise my own products or anything, Tom, but I think you want to let a professional help you on picking dividend growth products, because some of them can be absolute death traps. And the high yield is just an indicator that the price is about to plummet because the dividend is unsafe. So if you're in dividend investing, you've got to spend all of your time focusing on the company's future and can it continue to hold and expand that dividend payment? And that's easier said than done. So you really want to focus on that. You can't just buy a yield and assume that's attractive, because some yields are indicators of some bad things to come.
Steve, how do you deal with the fact that the likes of NVIDIA, the likes of some of the biggest, most successful companies have been coming out and downgrading their forecasts for the year because not of an issue of demand, but supply, the fact that they're having disruptions and they're having to deal with supply chain issues that they were not prepared for? You're seeing the shares absolutely plummet after you see some of these forecasts. How do you shift? How do you know when to actually be a buyer?
Well, first of all, we're digging in pretty hard to these earnings announcements. On NVIDIA, Lisa, as an example, I mean, bring it up, but our read on that, going through it carefully, is the real problem there is the stay-at-home trades ending. And, NVIDIA is almost 50% exposed to stay-at-home in the sense of gaming chips, et cetera. And that's the part of the market where things are really coming off the boil. So Apple, you could argue supply chain issues perhaps, or Dick's maybe. But, on NVIDIA, I kind of take exception with you on that one. I think that's is in fact a problem with these stay-at-home stocks, that people over-extrapolated just how far they can grow. And unfortunately, they placed a multiple on that doesn't make any sense.
Yeah.
And so with the Fed raising rates, you've got that working against you, and you've got, the economy lurching back towards normal. It's not going to be good for the NVIDIAs of this world.
Right. Steve Auth, you can take exception with Lisa anytime you want to. Thank you, Mr. Auth. He's with Federated Hermes with some really great perspective on the equity markets. I just got in an email from Al from New Jersey. He says, why are you looking at your cell phone? And on radio, we go to camera, we go to wide, so we can see the hills are alive with Sound of Music. And when you're looking off at Lisa's like sitting here being Lisa, like an adult, and I'm looking at my phone. I'm just checking out that the Red Sox are playing 465 baseball.
I thought you were scheduling Vet Bill's haircut. I thought that might be what was going on. You're checking out Red Sox?
No, Kenofee needs a haircut.
Okay, sorry.
But I also note here the Yankees are playing 7:05 ball. I'm not coming home until the Yankees play some 600 baseball. They need to lose 3 in a row.
Honestly, I'm with you. Being a Mets fan,
I know. We're not coming home until the Yankees lose 3 in a row. That's all there is to it.
Especially if it's nice.
Coming up, must watch. Listen, she's wonderful. Amrita Sen on $1.15 a barrel oil. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Singapore's president is warning against isolating China. He spoke after President Biden visited Asia for a series of summits that excluded Beijing. Lee said, if U.S.-China relations continue on this path, it will lead to further splitting of supply chains or worse. He said it's far better for China's economy to be integrated. Brazil's President Jair Bolsonaro said he and President Biden will have their first one-on-one meeting next month. Bolsonaro told CNN Brazil he will try to reset the relationship with the U.S. at their meeting next month in Los Angeles. Bolsonaro is coming to the U.S. for a regional summit. In Texas, companies will effectively have to take a vow of neutrality if the latest school shooting sets off a debate over gun control. Otherwise, they run the risk of losing business with state agencies. A law that took effect last year is aimed at protecting the gun industry from discrimination, similar to laws used to protect people from racism or other forms of prejudice. And Russia has cut interest rates for the third time in a little over a month. The central bank is hoping to stem a rally in the ruble and slashed its benchmark from 14% to 11%. Despite the sweeping sanctions imposed on Russia, the ruble has soared to the highest levels since 2018. Surging exports and capital controls have hit demand for foreign exchange. And Apple is responding to a tight labor market and the spread of unionization efforts in its retail stores. The company is raising salaries for workers in the U.S. by 10% or more. Minimum hourly pay for Apple staff will be bumped to at least $22. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
worries about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The reality of the supply chain situation, though, is that every company, every electronics company is having to redesign for geographic resiliency within the design of your products, redundancy, different designs, security, and I mean that's what we're going to be embarking on. Everyone's doing right now, and it's going to take, another year or two.
Like Bob Uecker, he's in the front row. Chuck Robbins, always in the front row for Tar Heels basketball, the mathematician from the University of North Carolina. And Lisa, Chuck Robbins of Cisco had some really sterile math there about, what was it, 8 parts to 4 million parts in one Cisco thing?
Yeah, how much they have to rearrange and fortify their supply chains.
I learned a lot.
And honestly, he also is trying to figure out how much inefficiency is built in as a sort of prerequisite of being just in time in the modern world. He also was talking about scope and scale, and we were looking at how much some of them are going to have to achieve that in order to manage through this period.
He said some of his supply issues are solved by moving on private jets, part 54672, from point A to point B.
Which shows where we are in terms of some of the supply chain disruptions, that's more efficient than just simply not having that part at all.
The good news is Chuck Robbins can borrow Elon Musk's fleet of jets. Joining us now, Alex Webb, expert on the Muskian Twitter saga as well. Days of our Musk, we call it. Alex Webb on Twitter, can you just give me an update? I'm lost in Switzerland.
So Elon is no longer going to be leaning on a margin loan from Tesla, at least according to the most recent disclosure. That means that he is going to have to pony up more in equity. That stands at, I think, about $33 billion now. He's got $7 billion or so in commitments from private equity firms and Larry Ellison, amongst others. It does beg the question. There have been whispers that he might try to renegotiate, even though he's tied to this deal and there's a big breakup fee if he doesn't make it happen. That if he has to find a huge amount of equity and social media stocks are down significantly, as they are, he might then try to renegotiate.
So the shares are up, Alex, in pre-market trading, but they're still far below that 54.20 mark that really was the ultimate pitch. How much disbelief is there sort of baked in? Why are people still so skeptical?
Well, Well, not least because Elon has said multiple times himself that he may not be able to do this deal, and he's been begging loads of questions, particularly about bots. Matt Levine did a very good piece recently in which he said that this seems to be a bit of a red herring. It's a straw man that he can beat if he wants to try to renegotiate. It seems as though he does want to do the deal in some form, and that's perhaps why the stock is up a little bit today. If he didn't want to do the deal at all, he wouldn't be rearranging his financing options, and so that's the indication that perhaps people are taking.
Alex, review with me. Everyone I spoke to thought $54 was a gift, take the money and run, and then we come down from there. Where does take the money and run end? What's that emotion? 50, 45, 40, or is it souther?
I mean, it could go a lot further south. If you look at the valuation multiples for these, based on their forward earnings projections, pre-deal, Twitter was trading about 50 times forward earnings. That meant that there was a lot of expectation built into where the earnings was going to grow. So the idea that even if Elon had a special source that could turbocharge them, maybe that would just bring it in line with where the market's expectations already were. You're seeing Facebook, which trades at about 15 times forward earnings. Of course, it is a lot more mature. It is a lot bigger. You could therefore draw a line anywhere between that 15 times and 50 times multiple and take your pick. Twitter is a far, far smaller company. That does give it headroom, but it also has far fewer users. So, you could go quite low. It depends what the current management can tell in terms of an equity story, in terms of what they think they can do.
Alex, days of our Musk are very interesting. They're always an interesting saga, and that's the reason why we all prognosticate on them. How much is this a sideshow to what we see going on with Apple and some of the other big tech companies that are actually ratcheting back their production forecasts and targets because they just can't get the parts?
Yeah, it's always worth remembering. Twitter is a small company. Twitter's, revenue is about the same size as BT's, or British Telecom's, profit. Apple is almost, well, it's down now, but it's a multi-trillion-dollar company. And so the small problems that Apple might have, and in reality they probably are quite small problems around the edges, they will cause fluctuations in earnings that are greater than Twitter's entire revenue. So it's meaningful if you take it in isolation, but in the big picture, it's probably not enough to cause big problems.
Alex Webb, you're such a pro. I'm going to catch you unawares here on the tragic shootings, plural, in Texas. Alex, you are truly expert at this. Given what the little bit I've read, should social media and Facebook try to limit these troubled people out on social media, gaining support from other troubled people?
The effect of social media has really been that where you might have, people with extreme thoughts in isolation in a whole bunch of different locations, now those people can find common ground because they're unified, without being unified geographically, and that clearly creates an issue. Does it solve the gun issue? No. This idea that actually it's to do with social media and it's to do with people being dragged to the extremes, yes, that's an issue, but I'm sorry, if they didn't have guns, it wouldn't be an issue at all. I don't want to get too political on that front. There are things that the social media platforms can do in terms of, ensuring people don't get pulled towards the fringes, but they haven't on the whole done it, and it takes a huge amount of effort and financial resources, which they have no particular incentive to dedicate, at least when it comes to their accountability to shareholders.
Well said. Alex Webb, thank you so much for that perspective, always from London today. And of course, we'll be in London tomorrow, migrating back to it. You said it's Tuesday.
Tuesday, yes. Tuesday. Monday you have off, or you're going to still be working, you said.
I'm never off.
Yeah, you're going to be working on your car.
I don't know what to make of Twitter. I mean, everybody here is wired into Twitter 24/7. We can all state it's a Teen Sweens company, right?
It's a Teen Sweens company.
But it's got a huge wallop.
It's also the issue that you talked about, right? What is the role of social media as the town crier, as the town hall, where people come and talk about what they believe, and how much should it be opened up? How much does free speech really mean? Anyone should be able to say whatever they want. And I think that that's sort of the political argument and backdrop for why it was so interesting. Yeah. On a broader level, though, it's buyer's remorse, right? It's days of our Musk saying, wow, that was a way high price, and I actually want to get it back down, and no one's going to actually give me the financing that I'd like. And oh, by the way, it's also bringing down Tesla.
Well, yes, and there are two moving parts here, Twitter and the Tesla story, but this is more common than you would believe, except his top tick first quote of 54, I believe it was. Everyone who's an adult in the industry tells me that was an extremely rich number.
Well, that's the reason why the board just said, sure, You expected some sort of pushback. You expected some competing offers. They just said, great. And now the issue is getting it done. I just wonder, from a regulatory standpoint, is he buying and selling while things are fluctuating so much?
Are we doing the real yield in London for John Farrow tomorrow?
I don't think so. I don't think so.
That's like 8 p.m. I think, or something.
Are we doing our scheduling here? Is that what you're doing on your phone?
No, I'm just trying to figure it out because we haven't talked enough about the real yield, and we're going to do it right now.
Yeah.
What's the significance of the one we never talk about, which is the 5-year inflation-adjusted yield is big time still negative?
It is. It was like negative 0.2%. I actually was looking at it this morning. I am excited. This is giving a lot of risk appetite still out there. So I do think it's interesting. Yes, of course I'm a bond geek. Is this a surprise to you at all?
No, I don't know. Barry fell off a stool at the piano bar last night when Abramowitz went into bond chat. From Davos. Stay with us. Bonds next.
the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
We
came into this year saying there's going to be a slowdown, and that's what you're seeing.
People are bearish now, and that's a big change from 6 months ago.
I think now the market is saying, well, the Fed may be overdoing it, and therefore they may not be able to hike much above neutral.
We have a lot of uncertainty as to what the path of that inflation will be.
We're hoping that there won't be crashes, but hard landings, I think, are inevitable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television from the World Economic Forum in Davos, Switzerland, the 51st year for the WEF, and they've announced January meetings in the dead of winter. We're going to see it in 7 months.
Despite all of the people decrying the fact that they'll be slipping all into the ice, that seems to be perhaps a better time. It is an eventful moment, and we've gotten a slew of corporate news amid this corporate executive gathering as people meet with policymakers, and it really paints a bifurcated picture for the U.S. economy and, frankly, for the world.
Get that in a moment with Macy's doing really well, but Lisa, to that point is the recession guess, and what I hear is a lot of pros saying you can't guess a recession.
And that, frankly, the data just isn't supporting it, although where is key. Perhaps not a recession in the U.S., perhaps a little bit more pessimistic when it comes to Europe and other regions, but still we are seeing people spending, and that's what we saw with Macy's. I think this is actually a really big deal. They came out and they boosted their expectation for the year. Yeah, across the board. And why? The why is interesting, I think. It's basically people are charging things more on their credit cards and they're buying things for weddings and beyond.
We heard that from Michelle Meyer at MasterCard as well. And far more important to me is this debate, and it's percolating or not a big deal, but nevertheless, it will be a big deal for your weekend reading and into June, and that is a study of the path of nominal GDP. And when I saw those headlines, Lisa, 14% as well, and then you've got a forward view of 12% comp sales and such. That's a nominal GDP on fire for the consumer.
Basically, another way of saying this is inflation isn't necessarily bad if the consumer is still spending at pace with inflation. And frankly, it will look a lot better for these companies, Macy's among them. And what you're seeing is people are coming in. They're actually going out to events. Those shares up nearly 12% now after ahead of the open, after their earnings forecast increase. And honestly, at what point do we take a look at this and say we can't get a recession if people are still charging everything on their Amexes and really going out to parties?
Are you looking at me, moi? Right over the keeper of the Amex knows I'm not doing it. Theoretically speaking, let me ask a dumb question in the morning. We do this early, 7 o'clock Wall Street time. Why is Target so grim and Macy's so good?
And it's the same story, frankly, with Dollar General that came out. But basically,
they did a Target?
They did a bit more of a Target, downgrading their forecast, but they haven't been punished to the same degree. But honestly, it has to do with where you supply your parts, and it has to be of the composition of the things that you sell. And that's what we saw with Target and Walmart, and perhaps Macy's had a pretty bit more basic mix of clothes, and people are buying them to go places.
Maybe a lift to the market off of what's going on at the land of the wooden escalator. Futures up 17, Dow futures up 143, NASDAQ up a fractional 0.2%, up 24 points. I'm reading this off the Bloomberg terminal on my iPhone. This revolutionized Wall Street, folks. BitDog is down to 29,000. Even 10-year yield, not giving me a story, 2.73%. How am I doing, Lisa?
You're just checking the Red Sox.
115, and the Red Sox are still playing 465 baseball. What are we going to do this morning before we dash to the airport?
We've got a lot of actually interesting data coming out. 8:30 a.m. we get U.S. initial jobless claims, which is going to be very important. Even Brian Moynihan of Bank of America said you've got to watch jobless claims. You have to watch whether the labor market is loosening up, and you're going to start seeing a tick up in the unemployment rate. We have seen a little bit of a shift with an increase in claims, but it's infinitesimal.
It's a toxic brew of labor statistics.
I'm not making this more dramatic than it is. 10 a.m. though, this to me could be the harbinger of more potential pain in the housing market. We've seen it so far in the volume of sales. We haven't seen it in the prices. U.S. pending home sales for April will come out. We saw new home sales on Tuesday come in well below expectations. Do you see a repeat of that kind of feeling? And at 1 p.m., Tom, you'll be on the edge of your seat. $42 billion of 7-year notes sold by the Treasury Department. And honestly, I am interested in this because this is always a disaster auction, and I want to see who comes in and buys it, in particular the Japanese investor base.
I'm going to be doing that circle, folks, you do east of London when you got to wait 3 hours to get into Heathrow. That's what I'm going to be doing. I'm going to be riveted to the 7-year auction.
I'm sure you will.
Somewhere. I'm going to be looking down at Charles Dickens' family home. Yeah, Charles, how about that 7-year auction?
The hand motions are
I got to go back to housing.
Radio. Yeah, please
Can I just state that, you know, fancy suits, fancy bow ties, you're in Chanel today. Guess what, folks? 50% of renters in New York City use 50% of their income to pay their rent. That's appalling. New York Times had that yesterday.
The scary part about that is that has been a long-standing New York City issue. Now it's becoming an American issue. And you're seeing that, and frankly, the more prices continue to go up, and frankly, the fact that housing supply is not coming back on, rents are going to keep climbing even if you get plateauing in the housing market. And that, I think, is what has a lot of people concerned about where the momentum is right now.
If you're part of Global Wall Street, this is the Bond Nerd interview of the day, a conversation with Ian Lingen, head of U.S. rate strategy, BMO Capital Markets. Ian, I want you to go to liquidity, to the fluidity of the market out there. Give us a report on the sloshing of the money given $2 trillion in the repo space.
Well, Tom, I think that you're right. There is a lot of money that's still out in the front end of the market moving around. That $2 trillion in the RRP is really distorting what we're seeing in bill rates, and it has changed the pricing in the front end of the market, and it has people concerned about the overall functioning of the Treasury market in the near term. But at the end of the day, it's still the most liquid bond market in the world. And as Lisa pointed out, we do have a pretty significant 7-year auction this afternoon that we're expecting will provide a good barometer of the willingness of investors to underwrite the deficit. Now, all else being equal, the recession commentary that has been making the rounds really is defining the direction of overall rates. We saw 10-year yields peak at 320. We're now down to 275. The curve, 2s, 10s at 25 basis points, give or take. We really are moving beyond the initial stages.
I mean, this is amazing. Is Ian Lingen one of the people that cares about the auction?
He is. There are a lot of people who do. I even got letters saying thank you for telling Tom that the 7-year auction matters. But Ian, this is important because you actually are reconfirming the lower for longer kind of thesis as you look out to some sort of slowdown. How much pushback do you get at a time when we don't know if Japan's going to come in? We don't know if China's going to come in. And frankly, we don't know if the banks are going to come in the same kind of way that siren is coming into our broadcast.
So I think that what we've actually seen over the course of the last 2 weeks are early indications that Japan is coming back into the market. If you look at the MOF data, we've got about $7 billion worth of buying in overseas notes and bonds. Now that follows a stretch of 16 weeks where there was about $75 billion of selling. So still an early process of getting Japan back re-engaged in the overall global bond market, but pretty solid sign that I expect will continue over the course of the next several months, because there is this sense of yield FOMO, as it were, looking back at 3.2% in 10s, but I expect will become defining as the summer plays out.
So, Ian, and not to play the parlor game that I know Tom absolutely despises of what the Fed officials will or won't do, but do you think that there's any sense between what Fed Chair Jay Powell said about not being nuanced about inflation and taking a pretty hard tone, and what we heard with Raphael Bostic that seems to be driving the narrative of the moment, which is they'll move 50 next 2 meetings, and then after that, they'll stop?
Well, I do think the Fed has done a good job of signaling that they are more committed to fighting inflation than perhaps the perception was when the cycle started. But I think the bigger debate is one about where is neutral monetary policy. And the way that we're thinking about it is we won't know it when we get there, but we'll know it when we've passed it. And that's why people are so worried about the wobbles in the equity market and what that means for financial conditions. Because if Powell overshoots, we are going to see a material slowdown, and that is going to lead to another recalibration of forward expectations for monetary policy. And that's why we're not at 350 tens, but we're close to 250.
Ian Lincoln, thank you so much for joining us today of BMO Capital Markets. The siren, you hear the siren here, and I look because I'm a sucker for the European siren. I think they just had a Jason Bourne sighting in the valley.
Well, then
I think that's why we're hearing more sirens.
I think that we'll get on our bikes after this and we'll go check it out.
This is a large transaction. We're not going to turn this into a tech discussion. We'll let our pros do that on Bloomberg Intelligence. But anytime the number $61 billion comes by, it gets your attention.
We're talking about Broadcom and the purchase of VMware, which is coming out as we do hear more about consolidation in the tech shares and on tech space. And I gotta say, they have so much cash. What are they going to be doing with it right now, given the fact that they are looking at still a growing economy in the longer term and still a transition to the tech industry?
This is really important, folks, and I hearken back to Microsoft and Activision, which are sort of, and I'm speaking total amateur. Activision was like, yeah, we're doing business in Microsoft, and Microsoft said, we like this, we'll bring in whatever the politics was. And maybe the same thing here, but what does it say about next year, given the tech turmoil that we have?
Well, there's some people who think that it will actually allow more sales because of what Chuck Robbins was saying yesterday,
where I wanted to go, yeah.
Where he basically was saying, look, for so long these founders had so much hubris, I'm using my words, not his, and thought that their values were so high that they wouldn't sell. Yeah. Now they might be starting to get willing to sell.
But we're never going to have Robbins on again, folks. He said they got a list of 30 companies they're looking at Cisco, and he refused to give us a single name.
He almost did, and then he looked at us like, are you kidding?
Yeah, we almost got it out of him. Very important. Look for our technology coverage across Bloomberg Intelligence on VMware and Broadcom. Futures up 25. Please stay with us. Always an important conversation. Jeffrey Yu, BNY Mellon.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A huge transaction in the tech industry. Broadcom has agreed to buy cloud computing software company VMware. The price, about $61 billion in cash and stock. VMware created the market for a type of software that lets businesses run corporate networks more efficiently. In China, Premier Li Keqiang warned of dire consequences if officials don't move decisively to prevent the economy from getting worse. Li told thousands of local officials a contraction in the second quarter must be avoided. His comments were more candid than the official read out but published by government media. And Apple is taking a conservative stance when it comes to building iPhones this year. Bloomberg's learned the company is asking suppliers to assemble roughly 220 million of the devices in 2022. That's about the same as last year. The mobile phone industry has gotten off to a difficult start to the year, and production estimates are down across the board. And the massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. And in the UK, Prime Minister Boris Johnson's government will lay out a plan to help Britain struggling with the rise of cost of living. Chancellor of the Exchequer Rishi Sunak will reveal a comprehensive response to help households. The offer will be partly funded by a windfall tax on the profits of oil and gas companies. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Earnings season continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
Sweden is in a different position. We don't have a dependence on Russian oil or gas. We have a 100% fossil-free energy system in Sweden, but we get affected anyway because of the joint pricing system in Europe, so the prices are very high.
Good morning, everyone. For the meetings of the World Economic Forum in Davos, Switzerland, Lisa Abramowitz and Tom Keene. Jonathan Farrell is off this week. Thrilled you're with us here on our first perfect day in Switzerland. We've had torrential rains. We've had clouds,
Hurricanes.
and then we had the hurricane. We had the hurricane the first day as well. It's really beautiful. You get why people come here in the summer.
I'm telling you, I grew up reading Heidi, and I understand now the fragrant flowers and the fields of grass, and I could go on and on.
We could go on and on. You can go up. The lifts are going. You can go up and go Val d'Ari, all that, and there it is. It's been a very successful spring meeting here in Davos, Switzerland. Right now, Anne-Marie Horton with us, and we're going to reset here on what's not being discussed in a China-free Davos, and that is Wither China. Anne-Marie Horton, our Washington correspondent, on finally, Mr. Blinken will give a speech on China. Anne-Marie, describe the finally as we hear this speech today.
Well, this has come from months of negotiations, right? 16 months they've been talking about this China policy, and then the speech long awaited because Secretary Blinken had got COVID. So this is something that many China watchers have been waiting to hear, but there's not going to be anything too bold in this speech. It's likely going to just talk about a lot of issues and the strategies the U.S. is already using when it comes to China. So one, they're going to emphasize strategy at home. How do we make innovation better in America, boost democracy in America? Two, strengthen allies. The president just got back from a trip in Asia. And then finally, making sure they can compete with China economically and militarily. But there's not going to be something new and bold that they've been hiding from us over the past year and a half.
But Anne-Marie, how much has the conversation shifted as we hear from Premier Li coming out and really downgrading the economic expectation for China, talking about an unemployment rate there near record highs? How does that shift the conversation from the U.S. standpoint?
I think the U.S. still sees long-term, though, as China being this mega powerhouse in the economy that they need to compete with, even though obviously this COVID zero policy and what you're seeing in China right now in terms of the economics due to that is hindering their growth. Long-term, the United States certainly sees China as the region, the country they need to compete with in the Indo-Pacific. And also, Secretary Blinken today is going to make that point. even though there's been a lot of time and energy in this administration used towards making sure that they are focused on Ukraine, they want to make sure that they are communicating that they are still very much focused on what is going on in the Indo-Pacific and in China. What happens after this is going to be interesting because a lot of capitals in Asia are going to be focused on this. And when we heard from Singapore, what they're saying is we don't want a bifurcated economic policy. And the premier is saying if the U.S. and China continue on this path, potentially we get there. And they want more integration of China. We did not see that on the president's trip.
Yeah, but the dominant factor here, Anne-Marie, is this is one of the few, we're all on the same page, views of Congress. Does Mr. Blinken adjust his speech and his strategy based on China or based on Congress?
Well, Congress hasn't changed in terms of wanting to talk tough on China, but there is some notable, interesting developments happening in Washington, D.C. The president on his trip said that when he comes back to the White House, he's going to sit down with Treasury Secretary Yellen and look at these tariffs, right? Because a lot of economists are saying if you want to get inflation down, which is their #1 domestic issue, one way of doing it is potentially to lift these tariffs. But now you have a bipartisan letter signed by Elizabeth Warren, as well as the likes of Mitt Romney and Bob Portman, saying do not do that. That'll hurt American workers, and it'll also show China that we cannot sustain weak pain for a longer-term policy. But you're really not going to hear anything different from Antony Blinken today, Tom. But what you maybe, if you want to loop in what he might say about Congress, is this White House really wants Congress to pass that CHIPS Act. That's about the strategy of innovation at home.
Anne-Marie, to get off script here as we end our time here in Davos, once again, America didn't show up. The Secretary of Commerce is here, Gina Raimondo, maybe there's a few others I haven't seen. But I want you to explain, Anne-Marie, the reticence of any government of the United States of America to show up to engage the global conversation in Davos. Why are Republicans, why are Democrats reticent to do that?
Well, I know also climate envoy John Kerry was there, Tom, because you had an interview with him. But you're right. There has been just low numbers than we've seen in the past. American presidents really don't want to go to Davos. This is very much seen as an elite club for the rich and powerful. And how does that track with domestic policies? Now, whether or not it's this administration or a prior administration, every president is dealing with some sort of domestic issue. And I think this administration knows that that would look poorly on the president to be hobnobbing with the rich and elite in this tiny Swiss mountain town that is very difficult to get to when he's dealing with higher gasoline prices and higher grocery bills at home.
See that? You see that?
You know what, honestly,
if 4 other cabinet members had gone, we would have dragged Anne-Marie here, but we don't.
Okay, but in all honesty, Anne-Marie has a point, right? I mean, this is probably one of the reasons why it has gotten under so much scrutiny, but there is a self-awareness here of that. And frankly, it seems like people are less trying to prescribe solutions and more trying to actually just have meetings and figure out things behind the scenes.
And Anne-Marie, one thing I've learned here with the pandemic is we're all learning to be social again. I mean, everybody knows I have no social life, so it's not a big deal. But
I'm sure you spent all your nights at the piano bar.
I did, but Anne-Marie, what's important here is on international relations, everybody's got to run into each other. And we don't see, what are they doing, mowing the lawn at the White House?
Well, here we've got sirens there, they've got mowing along. Anne-Marie, thank you so much for taking the time.
Anne-Marie, get a rake and rake up the grass.
Before we talk about her blazers.
The funniest noise here, it wasn't the sheep. I mean, the Simon and Will Kennedy goat farm is important. And the sheep aren't out today, they're in being cool. I think Dalio underwrote the barn that the goats and sheep are in. The funniest thing, you got to admit, was John Kerry. And the helicopter came overhead, literally, folks, right above us, and stayed there because they're doing a photo shoot. And, John Kerry's being very John Kerry and very...
One more time.
John Kerry's being very John
well done.
Kerry. And we actually got a smile when I told him it was the GOP helicopter.
That's true. He did smile.
We got the annual Kerry smile.
I got to say, the irony, though, of talking about climate change and having helicopters whirring above us. Again, all of this is not lost. It's a very self-aware Davos where people want to get things done.
Full disclosure, we will be at the Zurich airport, and you look out, on amber waves of Gulf streams. They will all be there. Please stay with us for the meetings of the World Economic Forum. They are aware here. Brent near 115 a barrel. An update from Amrita Sen on radio and television. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Bloomberg surveillance from Davos, Switzerland. Lisa Bramwitz, Tom Keene, John Farrell on assignment. We've got a busy half hour. Let's get right to it. In New York, Kaylee Lines.
Well, Tom, the picture is looking better for futures. We're right around session highs at the moment, up about 32 points on S&P E-minis, and the NASDAQ 100 futures are actually higher by a little more than 0.5%, even after some of the disappointing headlines coming from the likes of NVIDIA and Apple. In the bond market, we are seeing yields moving up now, a little bit of selling pressure in treasuries, up about 2 basis points on the 10-year. 276 is where we trade. Yields, of course, were lower earlier in the session, but as the sentiment gets a little bit more firmly risk on, you are seeing no bid in the bond market. And finally, in foreign exchange, it is the Russian ruble that really catches our attention today. The Russian central bank cutting interest rates for the third time in a little over a month by a larger than expected amount. Economists thought about a 2 percentage point cut, being at 63.20 or so to the dollar. But of course, there's a lot moving beneath the surface on the micro stories. So let's get over to Romain Bostic with some individual names.
Yeah, well, Kelly, a lot of that micro story centers around the retailers. And guess what? It's actually looking pretty good. Remember, we had kind of a mixed picture out of the retailers last week. This week, it's been a little bit more upbeat. Macy's shares up about 15%. This after raising its guidance for the full year. Those comp sales on a year-over-year basis came in at about 12%. And the company is expecting that momentum to continue as it's seeing a big shift to occasion apparel. The idea here that a lot of us are going back out of the house to fancy events, and we need fancy clothes, of course, to do that. In the meantime, we're still stocking on stuff for our homes. Williams-Sonoma up about 8%. They knocked it out of the park. Comp sales were up 9%. The street was only looking for 3% growth there, so triple what the street was looking for. And Dollar General, which of course services the lower income end of the spectrum, those shares up 11% after its comp sales came in at about 4%, and the guidance also seemed to be above the average of street estimates. So that's the setup on the retailer front here. The other big question for the day, at least on the macro basis, goes back to some of those tech names. You're seeing a mixed picture there. NVIDIA did come out with earnings last night here. They weren't bad. They were talking about 46% growth year over year. Unfortunately, this was a company that was growing in the triple digits just last year. Those shares down about 4%. Meanwhile, the big deal that really wasn't much of a secret, Broadcom agreeing to buy VMware. It's an interesting deal. The shares are only up about 1%, with most of the gains in the stock already being baked in, up about 40% since we first started to learn about those rumors. But they've now confirmed that they have struck a deal, $61 billion deal, going to be one of the biggest tech deals that we've seen in quite some time. And Twitter shares up about 5%, Tom, on the back of that amended 13D out of Elon Musk that suggests he's still maybe potentially going forward with this deal.
Romain Bostic, thank you so much. More on the equity markets and particularly the good markets of the moment on the close this afternoon. Futures up nicely. The 30-year bond ticks above 3%, which is one of those measurements, and I'm waiting for the VIX with a 27 handle. We're not there. We are also waiting for history to repeat itself, and we are seeing that now with the Chancellor of the Exchequer of the United Kingdom. Lisa, you've got a better grasp on the headlines than I do, but back to the 70s, maybe back to the 80s, Mr. Sunak is going after big oil.
Yeah, Rishi Sunak is saying that he wants a temporary levy of 25% on oil and gas profits, basically saying it will be phased out when profits return to normal. That's what he said. He also said the more a company invests, the less tax they will pay. It will expect to be used, the proceeds, to help adjust the cost of living for people in the lower income tiers. But this comes as energy prices absolutely surge. I know John's talked a lot about that, and people are seeing their bills double in the pace of a year. How do they deal with that at a time of inflation in so many other categories as well?
Up to the east coast of Scotland to Aberdeen, this is an exceptionally sensitive issue, and it's not the same geography as America, but you have to wonder, Lisa, does it follow on to the United States?
Yeah, how much does this basically open the door to some sort of tax on profits of oil and gas companies? It's definitely been something talked about in the United States. How do you then justify that at a time where you're trying to encourage investment, but also transition away from fossil fuels?
And for those of you on radio, it is the well-dressed and always perfectly coiffed Sunak, and behind him, I will not mince words, and I wish John Farrow was here to help us. It's an exhausted Prime Minister of the United Kingdom. If you're not up on the story, it's called Partygate. If you're not up on the reality, I don't understand it. John Farrow's expert on it, but I can suggest the Prime Minister of the United Kingdom looks exhausted.
Yeah, well, basically, this is all about holding a party when everybody else was in lockdown, not able to see their families during holiday, and how they deal with that. And it seems like he is very much in a beleaguered state.
We get to rip up the script to do that with Amrita Sen, Chief Oil Analyst at Energy Aspects, truly excellent on the microeconomics of what Brent crude will do. Amrita, in your academic studies, do windfall profit taxes work?
No, and especially not at a time when you're asking oil producers to also raise production, right? Because there is a bit of a supply crunch. So no, the answer is no.
I go back, Amrita, to Lyndon Baines Johnson and the idea of an investment tax credit. Now, Sunak is going to fold in here, if you invest, you don't pay as much tax. What kind of investment program spurs oil production?
The problem right now is that, we do need investment for sure. And to your question, what kind of investment spurs oil production? You're talking about investment in the North Sea. And that is not overnight. You are going to still look for, or you need to first and foremost find the oil. But again, you can, there are small fields that can still be extracted, and you can get some tieback projects, which are pretty quick. So say within a year, you could get oil out. But these are small volumes you're talking about, maybe 40, 50,000 barrels per day rather than hundreds of thousands of barrels per day, which is what we'll need. If anything, we probably need in the millions of barrels per day. For that, you need a sustained investment program. And, particularly the UK North Sea is a declining asset. Norway, on the other hand, actually has much better prospects. So it's not that lucrative to necessarily invest. But having said that, there are still assets which oil majors over here could extract oil from. And if the tax incentive is right, I think the world needs that oil, and they would be more than keen to develop that. Except, of course, that there are ESG pressures on them as well. So that is always going to be the tension, whether shareholders necessarily want them to invest in oil and gas, regardless of the tax structure.
Amrita, how much is this an issue of getting the oil out of the ground, and how much is this an issue of refining it so that people can use it to power their cars and their homes?
Well, it's a great question because we've got shortages in both right now. Of course, we're not investing enough in the upstream. That's been a trend for the last 8 years. In fact, on our database, we've not invested much more than $400 billion each year for the last pretty much 8 years. And since last year, China changed its policy around refining and product exports, and we've closed about 3 million barrels per day of refineries in the West, mostly in the West. So we are very short of refining capacity. We have a few refineries starting up in the next couple of years and even back half of this year, but not nearly enough to meet demand. So we are constrained on both sides, but right here, right now, I'd say we are more constrained on refineries. So the oil you and I would consume, that's more constrained than actually the crude oil side of things, which in itself is a challenge with OPEC spare capacity load.
Amrita, all of this comes together in a toxic brew, if you will, that only raises costs for consumers and continues to do so despite wobbles in the actual crude market. How much, I understand that perhaps we're not going to see oil companies produce more as a result of the tax that's being proposed in the United Kingdom. However, how much does it just give cash to be able to offset the costs for people who are going to only see those costs climb?
The challenge is going to be, how are you going to make this a global solution, right? Because oil markets are global, and I think part of the problem politicians in the West have is that they're always trying to come up with local solutions. Even the US is talking about potentially limiting diesel exports. That's just not going to work because ultimately both crude and products markets are very, very global. So we have to acknowledge that oil and gas demand continue to grow very, very sharply, particularly in Asia. And even, right now, China is not even growing. So imagine when China does come out of its zero COVID policy, the impact it's going to have. And we need to therefore facilitate enough investment across the board, not just in oil and gas, but also in renewables to meet that energy demand. Otherwise, like you say, there is only going to be one thing, that the cost goes up. It is pretty simple, demand and supply.
I'm reading an unfair question, and this goes back to 1980 and the experience of the United States in a, quote, windfall profit tax, which many people would suggest was just a flat-on excise tax over the already elevated taxes they were already paying because they were making more money. Amrita said, if the United States affects a British equivalent in a windfall profits tax, what does that do to a gallon of gas?
Well, I'll say this much. I think at least producers we speak to in the US have said the administration has considered it and probably still is. You will see US shale production fall because, again, what's the incentive? Much like in the UK, what's the incentive in the US to continue producing if you're just going to be taxed? And if that happens, then crude prices go up even further. Yeah. Refining was already constrained. So, gasoline prices are already high. And, of course, it's going to make matters worse. But the crude price will definitely rise.
Amrita, 20 seconds. Where is gas prices? Where are they going to go in the United States through the remainder of this year?
We think it's going to continue to go higher. You've got Memorial Day driving season, and it's starting up. And yes, Inflation is high, but this is the first time in a couple of years where there are no restrictions, and people are going to be driving and flying as well. So both gasoline and jet fuel prices will continue to rise.
And Marita Sen, thank you so much for joining us with Energy Aspects. Memorial Day, is that the Monday day we have off?
That's the day that you're supposedly off on Monday, that you're going to be working, polishing your car, reading in. I will say that, honestly, this is the issue, and you just saw gasoline inventories come in lower than expected right ahead of that driving season, which is the reason why people are looking for the prices just to go up.
I need a VW Rabbit diesel. That'll solve it. VW Rabbit diesel, straight into Bentley.
To load your car up with diesel, it costs like $100 each time you fill it up.
Good point, you win. Back then, diesel was cheaper. Figure that out.
Yeah.
Coming up, Michael Feroli, JP Morgan.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's one of the biggest technology deals of all time. Broadcom agreed to buy cloud computing company VMware for about $61 billion. The transaction represents about a 44% premium to VMware's valuation before May 20th. That was the last trading day before Bloomberg reported potential takeover talks. The UK will impose a so-called windfall tax on the profits of oil and gas companies. The money will be used to help fund at least $6.3 billion of support for Britain's facing a cost of living crisis. Chancellor of the Exchequer, Rishi Sunak, told the House of Commons the 25% tax will be targeted and temporary. And today, Secretary of State Antony Blinken will deliver a long-awaited speech outlining U.S. strategy towards China, but there's unlikely to be any bold new direction unveiled. Instead, Blinken will explain existing policies. The U.S. strategy includes investing in democracy and innovation at home, bolstering allies and competing with China on military and economic issues. And Alibaba reported better than expected 9% rise in revenue on the March quarter. Chinese consumers turned to online malls for basic needs during COVID lockdowns. Alibaba is a barometer for consumer sentiment because of its dominance in Asia's largest retail arena. The company is grappling with intensifying competition and mounting economic uncertainty at home. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think government bonds probably feel less volatile from here rather than credit, but it is still quite a challenging environment, and I think we've probably got another 2 quarters at least of volatility as we see the sort of economic backdrop gradually ease a little bit, and then we'll be looking towards the fourth quarter maybe to see a little more clarity.
Ann Richards of Fidelity International, one of my favorite people at Davos, someone who really has a grasp of the dynamics of global Wall Street. Great to speak to Lynn Martin of the New York Stock Exchange the other day. I think Loretta Mester at the Cleveland Fed. Math wins, and Ann Richards is the best of global Wall Street in mathematics as well. He knows the math of Macy's, and it's up. Omar Saad joins us right now, analyst at Evercore ISI, on a very good day for Macy's. Omar, what's the difference between Macy's doing well and Target doing less than well?
Good morning from halfway around the earth. Thanks for having me, guys. Great question, Tom. I think this is really important, actually. A lot of people look at the numbers coming out of retail recently, Amazon, Walmart, Target, and understandably get worried about a consumer recession, especially with all the inflation going on. But I actually think something different, a little bit different is happening. I think we're reverting to the mean. I think you're seeing a lot of those pandemic winning categories, winning franchises start to give some of those gains back. And some of those categories and retailers that really struggled during the pandemic for obvious reasons, such as Nordstrom and Macy's, you're seeing consumers return to those stores and return to those categories, such as dressing up to go out. So I think we're seeing more of a spending shift and a consumer behavior pattern shift than necessarily early signs of a recession.
The word moonshot is not part of what your research department wants you to use. The fact is Macy's has been a moonshot off the pandemic mat, but also over the last number of years, there's been a real doubt about the strategic execution of their management. Is this as good as it gets for Macy's?
Yeah, this is the ultimate question. Clearly they're having a very strong earnings pattern. The biggest change from history right now is the reduction in promotions. And there's 2 factors driving this. And really the ultimate question of what the profitability levels of a company like Macy's will be in the new normal world. Their margins are way up because promotions are way down. And this is partially due to supply chain constraints and solid demand. As all these companies and retailers pulled back on inventory and demand is rebounding faster than supply. But it's also due to a lot of data and analytics and a lot of technological advancements these companies can apply to their inventory planning, especially on an omni-channel basis when they've begun to look at their customer, not just an online customer versus an in-store customer. It's one customer and one inventory pool for both channels. And these have been step function changes for companies like Macy's as well to better plan their inventory. which means less markdowns and potentially longer tail to these strong margins that they've been experiencing.
So basically, much more efficiency. How efficient is it to see the consumer levering up in a massive way? And we are seeing that, and particularly these earnings in the forecast, where they basically said a lot of their outperformance or expected outperformance this year stems from the use of credit cards.
Yeah, that's actually an interesting new development. Credit card revenue share for retailers like Macy's has been way down because, as you know, consumers have been carrying much lower balances and been paying off their balances during COVID because of all of the savings. So Macy's, this is the first quarter they've started to see it. We haven't heard much from other companies seeing a huge increase in credit card revenues, i.e. carrying balances, but there is a sign, this is the first kind of sign that you're seeing that balances return. I don't necessarily think that means the consumer's under a super amount of stress, especially since you haven't really had a full credit cycle. However, we are seeing that lower end consumer, probably the one who's starting to build some balances, behave a little bit differently as we cycle stimulus. So early signs, but to me, it's not something to panic about. You know, having lived through 2008, 2009, this is a tiny, tiny amount of credit compared to that previous cycle. So, and I don't think we'll ever get as far out of hand as last time either.
Perhaps this is not anything to get that concerned about, but perhaps this is something that indicates that even if wages start to increase at a slower pace, even if you start to get inflation outpace and continue to outpace those wages in a meaningful way, that you'll see more and more plugging of that gap with credit, right? I mean, how much could that prolong the cycle for only more pain later? How much are you actually seeing that versus just, you know, basically people able to spend so with their savings, as Brian Moynihan of Bank of America was saying?
Yeah, I'm more in that camp so far. Now, keep in mind, the stocks we cover are more luxury and fashion and tend to tilt towards a high-end consumer. But even when I talked to TJ Maxx, we were visiting them in their headquarters the other day, they're seeing no resistance to price increases, higher AURs. You know, typically signs you'd see of consumer pressure saying, wait a minute, that's a little bit too rich for my blood. Now, a lot of this is really kind of revenge spending going on after 3 years of being locked up. And the categories I cover tie into travel and experiences. People go shopping. And so there's some strong underlying demand there. But there's just literally no sign of trade down either, which is something we've seen in the past. It's just not happening. If anything, people still seem to want to trade up.
Omar, one of the things I've done in my extensive retail research is kids want vintage clothes. I don't know if you were aware of that, but if it isn't vintage, I won't wear it. How does Macy's and the other, how do they deal with well-mannered children who won't walk in their stores?
So specific, Tom.
Yeah, this is great. Vintage clothes is a great entryway, especially with a lot of those young consumers who really want authentic brands, authentic experiences, and authentic products that have real traceable roots. It's one of the reasons a brand like Air Jordan is doing so well, because they relaunched so many of these shoes with long lineages that go back decades. Yeah. So it's a very strong trend. Now, look, Macy's actually picked up millions of new customers during COVID. And a lot of them were actually young. And this is because you had a lot of young customers who were online searching for fashion, searching for these brands that sell vintage products like Levi's and Ralph Lauren. Yeah. And lo and behold, Macy's is one of the biggest online retailers of these brands. So actually a lot of young consumers discovered Macy's during the pandemic. Right. Now, the actual volume of vintage clothing, Tom, that's out there is relatively limited to the overall supply of new clothing. But it's a great entry point for a lot of these retailers and brands, that younger consumer.
One final question. We got 30 seconds tops. Can you explain Brandy Melville?
Oh, my goodness.
This is a private company. It's not something we're super close to. It attacks that kind of teen, fashion-forward market. It's actually an Italian firm. I don't know a ton about it, Tom, but it does reflect, I think, that desire of the teen consumer as well to return to fashion, return to life, and get dressed up again. And we're not going to be wearing sweats forever.
God. Omar said, he is so slick. He nailed that. Omar said, I love busting your chops. Thank you so much. Greatly appreciated this morning. I'm in Italy.
Okay.
And I go by a store, and it's Brandy Melville. It looked like the Vatican. It was so packed.
Let's be honest. You have a personal gripe with Brandy Melville because of personal experience. This theory about all of the vintage clothing, and theoretically, what would you think about Brandy Melville?
Bloomberg surveillance, we stated it is. Brandy Melville is one size clothes, which means they buy them and they're appropriate. and then they're not. And then you're yelling at them. You can't wear that. That's Brandy Melville.
Boys, so I'm dealing with the Air Jordan resale situation. So we both
Brandy
have our own
Melville
things.
is an outrage.
Okay,
It's a
well,
scandal.
I'm sure everyone's really happy to know.
We're going to get back to the markets. One of our best guests, Cross Asset, with Jeff for You, Email Market Strategy, BNY Mellon. We'll do that in a bit. There's a $61 billion merger in tech. Stay with Bloomberg today. This is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
whenever the Fed starts raising interest rates, the specter of inflation goes from the back burner to the front burner, and people are talking about it.
I think it's a troubled period ahead, and you're going to see social instability.
What you're seeing here is a repricing and a re-rating of the U.S. equity market.
A lot of people are calling for recession. I think recession and recession talk is a little bit premature, too early.
If they want to get inflation down to 2% within 6 months or even 1 year, they're going to have to overdo it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Countdown to the latest read of the U.S. labor market from the World Economic Forum in Davos, Switzerland. This is Bloomberg Surveillance live on television, on radio. Tom Keene, Jonathan Farrow, Lisa Abramowitz. John Farrow's off. We are here broadcasting live on this last day of the conference as people empty out. The gloom is lifting, and we are about to get a read on a labor market that still has steam and is presenting a real conundrum for people looking for gloom.
I think you're dead on that there's been a lot of cross currents here, and all of it comes back to the labor market, and this tea leaf, the weekly data of claims, is critical.
I think it really is what people are looking at a time when they are trying to figure out whether people are exiting the labor market, whether it still has the tightness that it once did, and we're getting that series of possibly brighter forecasts from retailers like Macy's where people are still spending. How do you crosstail that into all of the negativity that we're hearing here at Davos and beyond?
Can you talk, because my throat is gone because of the fondue last night.
Oh yeah, it's rough.
I hit the 40th piece and it was just too much.
What was it again? Velveeta?
Could you get me some schnapps over there, please?
Velveeta fondue.
Yeah, no tang in Switzerland.
Yeah, exactly.
Come on right out here. You don't have to duck down. Come on, Cyrus.
We have a big crew who are helping us make this happen and bring the interviews. Tom, I think that this has been a really interesting Davos with respect to how gloomy people are about Europe. There is a different tone when it comes to the U.S. The stamina of the labor market and the stamina of the consumer continuing to spend. And frankly, some of the stimulus that a lot of people blame for the inflation also has given a lot of savings, a boost, which is giving people a lot of ability to spend.
I mentioned this to a couple central bankers today. I go back to Joe Stiglitz and the small G, the growth rate, and there's an embedded belief here that the United States, whatever happens, will have a better growth rate than so many other regions.
And we'll get into that here in a minute with Jeffrey Yu at BNY Mellon to talk about that disparate potential outcome for Europe and the U.S. Right now, we are seeing a bit of a lift to markets. I'm wondering whether we can actually eke out a weekly gain, Tom, after the longest streak of losses going back to 2001, and what would actually drive that, given that we are seeing some stability in yields. We are seeing.
Over.
Yeah, well, I mean, honestly, people are thinking maybe we're starting to price it a little bit more of a slowdown that will give the Fed more flexibility. With that S&P futures giving a lift up about 0.5%, getting really close to that 4,000 mark, Tom.
You saved me there, Lisa. Thank you so much. What I was choking on is I read Jeffrey Yu's research report, and this is, without question, the most controversial conversation here in Davos. Jeffrey Yu is just brilliant with BNY Mellon. And Jeff Yu, you say they're wrong. All the people doubting Plaza Accord and dollar intervention are wrong. You mentioned the giant Frankel of Harvard, and you say we need to start to think about a Plaza Accord of 2023. Why is the dollar too strong?
Well, the dollar's too strong in terms of valuations, but the U.S. needs to figure this out on its own accord. The dollar itself from the Fed is not really going to matter in terms of financial conditions. You look at the four pillars of financial conditions: rates, exchange rates, spreads, equity markets. FX, by a long way, ranks last. And also, what does Japan need? What does Europe need? Europe, finally, they're changing their tone. They need a stronger euro to bring down inflation, but they need to realize this actually strengthens consumer sentiment as well and their purchasing power. So this is a very different environment compared to several decades ago. We need to think about not a new Plaza or Louvre or anything like that, but what each country needs for themselves. So that's the difference between now and 3 decades ago.
Let's find common ground between David Folkets-Landau over at a small German bank and Ian Bremmer out with his new book, The Power Crisis, and Every Nation for Itself. Jeff Yu, how do you have coordination if you're not camped out in the lobby of the Plaza in New York?
Well, right now you have enough communication between the central bankers, and we've had that over the last 15 years or so, like the swap lines, during the crisis, during the pandemic. But it's kind of backward-looking. There's coordination when it comes to firefighting, responding to crises. Look at how the sanctions were brought in after the war started. But where is the coordination up ahead in an era of deglobalization? That's the philosophical question we need to ask. If you're talking about deglobalization, then why bother coordinate? Isn't deglobalization by definition every central bank for itself? So philosophically, where do they stand right now? Where do governments stand? There needs to be harmonization. If not, then we can forget about picking up the phone.
Okay, so Jeffrey, if we don't get that harmonization and we stay where we are, which is in maybe perhaps not a deglobalization, but a regionalization of partnerships, how do you see the euro reacting at a time when people are downgrading some of their growth expectations for world growth? And we're starting to see, I don't know, the euro get a little bit of a bounce from that.
So I think Eurozone policymakers, and to their credit, the ECB is starting to realize this. A strong currency need not be a bad thing. There are more things to an economy than a trade surplus. Let's get away from this 17th, 18th century mercantilist way of thinking. I know it's harder for Asia and Euro to dislodge, but if you have stronger purchasing power, that can actually help offset some of the inflation losses to real income as well. So they need to state a stronger euro at this point, and the euro is still going to be undervalued, like even 5 big figures from here, right? So that is good for the Eurozone households. It can lift their demand. In real terms, that's good for the euro. So they need to actually cross that hill. They're not there yet, but finally they are starting to shift. So I think the euro will find a new range, a higher range, but still, even with a higher range right now, it's still going to be very, very much undervalued.
We're talking about fluctuations that are minuscule, at least for this week, but the big elephant in the room at Davos has really been China, Jeffrey, and how we deal with the fact that the slowdown that we're seeing from shutdowns probably are not going to end anytime soon. How do you map that out into a currency call, into a growth call, at a time when it seems as though that is going to remain the policy, at least for the remainder of the year?
Well, what's fascinating is if we look at our iFlow custody data, our clients are starting to buy CNY, they're starting to buy Chinese equities, and after an unbroken run of, let's say, 3 or 4 quarters of selling, gentle buying in Chinese government bonds as well. So it looks like the global markets, they're so underweight China right now, they're not actually taking a growth view. I highly doubt that because of the lockdown still happening. But maybe they're just starting to find some value on a total return basis with Chinese equities, Chinese bonds, and also the currency, where it is. But to translate that from a re-rating, from a growth view, I want to go overweight China again, the window is narrowing, I'm afraid. So we need more stimulus, more government-driven stimulus and demand lift right now. But yesterday's Premier Lee's comments, he said basically, to local governments, you need to fend for yourselves, right now. There are very limited resources. That's tough.
Dr. Yu, let's turn to your virology expertise, which is if China ends on lockdown, what happens to the greater Pacific Rim? One day it's going to be over, then what?
Right, then we are going to have, not only in an Asian, but probably a global context, the mother of all services stimuluses. And we're talking about not just lockdowns ending, but also borders reopening in China. There's no time frame for that. But look at how Thailand, Indonesia, Malaysia, the ASEAN countries dependent are on Chinese tourists. Davos, Tom, go to the watch shops in Davos, are they complaining about lack of Chinese tourists, buying all those Patek Philippe's, right? So when they return, that $200 billion services deficit China runs with the rest of the world, that is going to be such a big stimulus, something we can all look forward to, but right now, again, no timeline.
Do you think, Jeff, that we're seeing right now people bake in an appropriate slowdown when we take a look at the global economy, or do you think that there's more to come to be priced into risk assets and, frankly, even to yields?
So on a qualitative basis, I think we need to differentiate what is a slowdown versus, basically soft versus hard landing. I think people are still baking in a soft landing right now, but if the Fed turns restrictive and we still think the market's actually not appreciating the risk of that enough, we're talking Fed funds rate going to 3.5 to 4, that kind of level, then a hard landing, that I think the market is probably taking a bit too lightly right now. So we're not saying it's over yet by any stretch. The markets are appreciating a growth slowdown. They're just not ready to bake in a harder landing. So I think that's where some further repricing is needed. But in the short term, valuations adjustments, weighting readjustments, we're seeing a bit of a risk bounce. But I think the Fed will have the final word on that.
Jeff, you brilliant, extremely important note, really pushing against the forget about the Plaza Accord consensus. Mr. Yu with BNY Mellon today. I can't say enough how alone Jeff Yu is on this call.
Yeah, a lot of people are looking for some sort of coordination in a way that perhaps cannot happen.
Landau,
yeah.
Deutsche Bank leading the charge on that.
But frankly, it's hard to see how you get some sort of synchronized move at a time, as Jeff was saying, where people are moving away from each other and looking at idiosyncratic economies.
I'm going to tear up. My throat just got, you do this for 8 hours for 5 days, and, I lost it there. And Lisa, you saved the show. Reto, keeper of the Amex, is Swiss. Yeah. He says, Tom, we staffed him. Reto's in charge of like the whole budget here.
Yeah, including the fondue.
Yeah, and the team here, I didn't know this. I hope I'm pronouncing this, Reto, I hope I'm pronouncing this right. Regi Kirsch from Schweiz in Lucerne. We say thank you to Fossbend, Regi Kirsch. It's fruity flavor complemented by a subtle bitterness.
That's great, Tom.
It's great, yeah.
Thank you for that. I'm sure when you say, I hope I'm pronouncing this right, just for everybody, that probably is not right. Coming up, you keep practicing that. We're going to be talking about real estate coming up, which I'm very excited about.
Colorless.
Frankly, I know we're just having two different conversations right now, but in addition to the jobless claims that we get
the last 5 days.
in 20 minutes here, we're also going to be getting housing data that will be key at a time when interest rates are climbing to the degree. Jonathan Miller,
how do you
always
say the
brilliant,
Canton Zoo?
Miller Samuel. He's president and chief executive officer.
Z-U-G.
I'm fascinated to hear what he has to say.
Zug?
That's.
Zug.
I think we'll ask Jonathan Miller. This is Bloomberg.
Regi Kirsch.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. It's one of the biggest technology deals of all time. Broadcom agreed to buy cloud computing company VMware for about $61 billion. The transaction represents about a 44% premium to VMware's valuation before May 20th. That was the last trading day before Bloomberg reported potential takeover talks. The UK will impose a so-called windfall tax on the profits of oil and gas. The money will be used to help fund at least $6.3 billion of support for Britons facing a cost of living crisis. Chancellor of the Exchequer Rishi Sunak told the House of Commons the 25% tax would be temporary. Senior ministers in the British government have long opposed a special levy on energy firms because they fear it will hurt investment. In China, Premier Li Keqiang warned of dire consequences if officials don't move decisively to prevent the economy from getting worse. Li told thousands of local officials a contraction in the second quarter must be avoided. His comments were more candid than the official readout published by government media. The massacre at a Texas school has revived discussions of so-called red flag laws as one potential compromise between Democrats and Republicans. Those laws allow police or family members to ask a court to temporarily remove firearms or prevent their purchase by someone considered a danger. Still, there are divisions between the two parties over the specifics. And Apple is taking a conservative stance when it comes to building iPhones this year. Bloomberg's learned the company is asking suppliers to assemble roughly 220 million of the devices in 2022. That's about the same as last year. The mobile phone industry has gotten off to a difficult start to the year, and production estimates are down across the board. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Daybreak with links.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Continues.
There's so much nervousness in the market right now.
This market punches you in the face.
Bloomberg is fastest with the numbers and analysis.
Big numbers from Disney.
It just slammed expectations.
Bloomberg, the fastest numbers and analysis you trust.
There's no doubt that the fight against COVID in China has had an impact very short term on the Chinese economy. But China is very determined and seems very convinced that they will be able to meet their growth targets. And they're not right now accelerating their infrastructure investments. And when they accelerate infrastructure investments, it's good for iron ore demand.
He's the Chief Executive Officer of Rio Tinto, Joachim Stassholm, with a view from Sydney to Perth. Did you know Sydney's on the East Coast? Perth is how they say it.
Oh, I think that we're going to get people from Australia just writing in, being like, please never, ever say Perth again.
Rio Tinto with a step forward, I guess, with BHP Billiton and the rest. That would be Broken Hill Properties.
Oh, thank you.
From Sydney to Perth as well. They are, and I got the step is looking good right now. I looked at Newcastle coal. In fact, I mentioned Australian coal today. It spiked up so much, you can't even do a standard deviation study. Welcome to Davos, World Economic Forum. And right now, on these emerging markets, which are hugely represented in these meetings, Damien Sassower joins us in New York. Damien, I want to talk about what Rio Tinto's looking at, which is the moonshot of coal. Is your world adjusting to a permanence of higher commodity prices, or do you look at Newcastle coal from Sydney to Perth as a one-off?
Well, I think it's turning the other way, actually, Tom. I mean, look, energy is one thing, but base metals have really fallen off, and you see that reflected in a lot of the emerging market currencies, such as the real and the South African rand and the Chilean peso, and many of those that basically go hand in hand with that. But look, you know, for me, the big story in emerging markets is going to be, on one side, you've got President Xi and his commitment to COVID-0, and you've got Premier Li Ka-shing, who called in over 1,000 financial professionals just yesterday in an emergency meeting to talk about increased lending to households and to commercials. And if you're running a bank like ICBC and Bank of China, you know, it's like deciding which pitcher to pull out of the Red Sox bullpen. There's really a very small probability of getting a win out of this. So, how do you get demand?
Try to translate it for us. Damien, this is important, and I'm so glad that you brought this up because, frankly, the dichotomy between these two behemoths in China really highlights how people are wondering about the leadership and about the direction of a nation absolutely hammered by their zero COVID policy. What do you take away from this, and frankly, from the possibility that Xi Jinping doesn't have the clutch over the nation that he was expected to have?
Well, my takeaway is that there is a distinct political agenda here ahead of the October Party Congress, and it's getting very, very difficult for President Xi to hide behind that. You know, he's trying to get reelected for an unprecedented third term, Lisa, and I think that is his priority, more so than the health of the economy in the state, right? Because if he really was concerned about the economy, in my opinion, you'd be handing out cash. You wouldn't be trying to extend credit to people when there's no demand for it. You'd be handing out cash, giving vouchers, giving assistance, direct financial aid to households and companies who so very badly need it. And that's what's missing here in the 33-point plan, Lisa.
Yeah, but Damien, the fact that such a high-level official would come out publicly and so directly give a different tone than Xi Jinping, who is by all accounts going to be the leader indefinitely, what does that tell you about where the economy is, and frankly, what happens after the Party Congress is held?
Well, it's confusion. I mean, it's basically, look, I mean, Premier Li Ka-shing is not going to deliver that address without, you know, full sign-off by the president. So, you know, it's two sides of the same coin, and it's ambiguity, more ambiguity, and it's that which is really driving the decision tree at the top of, in the C-suite of most of the major corporate banks. I mean, how do you lend to small and medium-sized businesses if their business plans don't work, right? You know, you're going to be, you know, it's what you heard about China going back into the 90s. You know, they're going to be building towns to nowhere, railways to nowhere, bridges to nowhere. And I think, you know, something needs to be done to prevent that, quite frankly.
You just brought back David Tomlinson in Mary Poppins, a magical moment there with Dick Van Dyke. Damien Sassower, you're a font of culture. Damien, I met with a Minister of Finance of Malaysia today, and every time we talked, he was brilliant. He circled, plus he's a Liverpool fan. What is that about? And he circled back, Damien, he circled back to their commodity mix. Let's go to the heart of it. It's 443,000 miles from Sydney to Perth. Tell me about the commodity variable for China as they come out of lockdown. How do you analyze that?
Well, you know, it's getting increasingly difficult, Tom, and I'll tell you why. What China's been doing, I mean, G7 Connect, which provides, you know, real-time trucking data out of China, you know, they banned that data now from going out to the masses, you know, and what you're seeing in China is they're really restricting a lot of access to high-frequency data. So we really don't have that much more to go on, and I think that's a real concern. It just shows how bad things are on the ground, how deep, you know, the slowdown is hitting, you know, and so, you know, for me, it's how do you kind of provide transparency in a country which is basically holding it back? As an investor, how can you justify to your fiduciaries making an investment in a country that's just, you know, holding back data that's not giving you all the answers? And I think that's the real concern for me. I think that's the real concern for emerging market practitioners here.
Damien Sassower, thank you so much. An important conversation here on EM, which I would say in the market, Lisa, is out of the picture. Yeah. Except Davos, it was front and center.
Very much as people try to understand where the marginal growth is going to come from if it's not going to come from China. Tom, literally that entire segment, you're just coming up with ways to keep saying Perth. Am I wrong?
Yeah, but what I don't understand, you know, I read by Neville Shute and I watched On the Beach and all that. There's just this conceit that you say from, it's like in America, from New York to San Francisco.
Yeah.
They say from Sydney to Perth, That's how they say it.
I don't think that they say it like
Perth.
that. I don't think
They
so.
never say from Perth to Sydney. Do you ever do a road? I don't know. Do you ever do a road trip across Australia?
I think that I guess we have to do that, right? I guess we'll do a full-on ABBA shoot. Honestly, we are about 5 minutes away from U.S. data, and I do want to refocus on that because, frankly, I do think that it will be telling. We're going to get the GDP reading for the first quarter, but more importantly, jobless claims.
If you do a road trip in Australia, like I did this in America, and you do a road trip, you listen to Grand Funk Railroad the whole way across America. What do you do in Australia? Listen to Rick Springfield?
No, ABBA. You listen to ABBA. What else are you going to do?
ABBA, that's Swedish.
Whatever. They had an Australian. Sweden. I don't know. Maybe you can ask Qantas. It can let you know. Can we get to the jobless claims that we're going to be getting in about 5 minutes' time?
Yeah, serious number here, and we're back to normal. That's what we're talking about.
Well, are we back to normal, or do you start to see the swings that are more significant as we do see a number of companies start to lay off staff? You're seeing that on the peripheries, particularly in
This is not like Brammo Gloom. You're saying statistically we're seeing math. It says it.
I would say anecdotally. There are certain companies that hired. You saw Amazon with this. You saw Walmart with this, that hired substantially some of the warehouse staff and other personnel that are having to cut back.
What's
How
the
much does that go
statistic
through?
that matters? What's the claims number where we go, OMG, it's over, we're all going to die?
It's just the pace of how much it increases. Do we move off of the incredibly low levels quickly?
That's that English major calculus you just did there.
Thank you. I appreciate that. English major.
Michael McKee, Michael Ferroli, everybody in the half hours today. Michael, stay with us from Davos. This is Bloomberg on radio and on television. Good morning.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number. And most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Good morning, everyone, from the World Economic Forum in Davos, Switzerland. It's a perfect day here, and supposedly it is a perfect American labor economy. But an important data point, our Michael McKee, our Bloomberg Economics and Policy correspondent, the weekly jobless claims number. Michael?
Well, it's not just the weekly jobless claims number, Tom, although that's important, but we're getting the second read on GDP. At this point, the jobless claims numbers are coming in at 210,000, which is down from the 218,000 initially reported last week. And that is going to be good news. There were some who even went as far as speculating maybe the labor market was rolling over, but clearly that is not the case. GDP comes in at negative 1.5%. That is lower than the 1.4% originally recorded by the government for the first quarter. The personal consumption index rises, though. We spent more money. People did, 3.1% increase over the fourth quarter compared to a 2.7% increase. So it does look like the economy is still in decent shape, or it was coming out of the fourth quarter and into the first quarter. Now the question is what's happening in the current quarter.
Michael, the markets here pretty much stasis here. Futures up 15, and we'll see what the bond market does. Michael McKee, Jeffrey Yu, with an incredibly important note on the Plaza Accord, cites Jeffrey Frankel of Harvard University. And as you know, Michael McKee, Frankel of Harvard has been definitive on trying to figure out the definition of a recession. Michael, with all that you read, do you ascribe to NBER 2 negative quarters of GDP is a recession?
Well, that's not the NBER. That's just sort of a technical definition that appears in some textbooks, and it's not what the NBER says. The NBER looks at consumer spending and business spending and things like that. And it has to be a generalized decline in economic activity over a period of time for them to declare a recession, which is why they wait a long time before saying we are in one or not, because they need to get all of the revised figures together to find out if we have had that kind of decline. There's no way we're in one right now. There's no reason to think we couldn't go into one. We're not likely to, according to the latest numbers that we're getting. But right now, we're not anticipating that this quarter will be a negative quarter either.
Mike, this was actually a positive downside surprise, right? Because you want fewer jobless claims if you want to see a robust market, or perhaps not. Have we gotten back to good news being bad news? I'm looking right now at some of the futures off the lows, frankly, off the highs, and you see yields near session lows, particularly on the 2-year note. Mike, what's your interpretation of this as people look and expect the Fed to perhaps be a little more patient than a couple weeks ago?
Well, everybody is, as you say, expecting the Fed to be a little bit more patient. It all came up yesterday in the minutes, which didn't tell us anything new. The Fed is going to raise rates 50 basis points at the next 2 meetings and then see what happens. And so it may be a little early yet to make a call on that in terms of what's going on with economic data, although new home sales and existing home sales have started to roll over, and we've obviously had troubles in the stock market. But as long as the jobless rate is this low, and of course we'll see next Friday what happens with employment, it's not likely that we're going to see the Fed pause, because inflationary pressures will still be there. And they did warn a lot in the minutes yesterday about the impacts from China and the impacts from the Ukraine war. So that's what they're going to be watching for. Clear, as Jay Powell says, clear and convincing evidence that inflation is going down, and the numbers we got today aren't saying that.
Michael McKee, thank you so much. Greatly appreciated here on claims. Claims come in a bit positive here, but that GDP revise a little bit challenging, to say the least. Right now, an immense joy is Michael Feroli, a chief U.S. economist at J.P. Morgan, and the hallmark of his weekly notes written Friday evening, it comes out about 7 p.m., is you talk about going beneath headline analysis, and that's the JP Morgan team, even algebraic function. Michael, algebraic functions Friday night at 8 p.m. is a highlight of my Friday evening. What do your algebraic functions say about the American housing market? Units are grim, price hasn't moved.
So housing clearly is suffering a little bit from higher mortgage rates, and we saw that again with the new home sales that Mike just mentioned, as well as almost every housing point we got last week. And we would expect that to continue for the next several months, just given the lags between when mortgage rates go up and when home sales come down. That said, we're coming off, white hot levels, and so we're basically, I think, getting a little bit back more into balance. And it's likely to be the case that inventories, even with home sales coming off, inventories will likely remain pretty lean, and home prices, we don't see home prices declining, certainly. So hopefully getting a little bit more into balance, cooling off, but not 2006 by any means.
Michael, this question pains me to ask, but are people getting too gloomy as they start to price in some sort of slowdown that allows the Fed to be patient?
So the Fed, I think, will continue moving after, obviously, we're going to get the June, July 50 basis point moves. And I think to the point you discussed earlier, look, Chair Powell is an outcome-based guy, and he wants to actually see inflation and activity slow down. So while housing may be a leading indicator for the economy, I think Powell will actually want to see things slow before he actually pulls off the rate hike. So I do think that maybe we've gone a little bit, maybe we're thinking the Fed's going to be too gentle here with the economy, but they really have their work cut out for them, and so I don't see them pausing after July.
What are you looking for, Michael, as a sign that truly we are seeing some sort of slowdown with respect to inflation at a time when we're hearing from everyone here that the consumer is still very strong?
Yeah. I think you'd really want to see the labor market soften more materially than we have seen. Again, we don't want to see a lot of unemployment, but the jobless claims numbers that we just mentioned, those can suggest we're still in a very hot labor market. So you would like to see next week not only job growth slow, but perhaps vacancies come down. And we'd like to see that happen, in a smooth kind of linear fashion. Generally, it's not the case, but that would be the ideal scenario where you have a nice slowing in job growth.
One of the key sentences I've heard here, Michael Feroli, is central banks that really don't have reaction functions right now. They're making it up as they go. As you and Bruce Kasman and your team piece together tomorrow's note, do you have a mathematical structure or a geometric structure of where we're heading, or are you as blind as the central bank?
Look, I think it's clear that the Fed is not operating and has not been operating by anything close to a Taylor rule or any other type of formulaic reaction function. So I think that makes gauging central banks here a little bit tricky, but that's been the case for a couple of years where you can do your implied Taylor rule and it doesn't look anything like what the Fed's been doing. So that's just a fact we're living with.
What is the fact we're living with? As Lisa mentions, to just watch the consumer. Is that the heart of the matter?
So the consumer matters. I think the consumer will follow where the labor market goes, and that's why I really emphasize the labor market. And we can talk all about excess saving and all that, but it's really labor income that's driving consumer spending here.
Yeah, Michael, that's Jamie Dimon on line 3. Pick up the phone, say hi to Mr. Dimon for us. Michael Feroli at JP Morgan this morning. I really can't say enough about the research effort they do. Robert Millman inventing the weekly prospects as far as I'm concerned, and Kasman and Feroli. We are such nerds, Lisa. Honest to God, Friday night, you're sitting there with a beverage of your choice, and you're doing whatever you're doing, and you're like, 7 p.m., is Feroli out yet? Oh, hi, yes. How about the Red Sox? Is Feroli out yet? It's literally that.
Don't blow the secret. Come on. We're supposed to not seem like that's our Friday nights, but yes, that is our Friday nights, and I think everyone knows this. Tom, I think it's time for us to actually interview somebody who has really been a dominant personality here at Davos and has really been an incredible host of several different panels and really has a bird's eye view into the cross currents of many different countries, and that is one Tom Keene. What was the biggest takeaway from the panels that you
Did
did?
my agent sign off on this?
I don't know. You're going to get royalties. But what? I mean, seriously, we haven't even talked about
number
it.
one
Race to
takeaway.
set, yeah.
And Lisa, you've been great about this. Lisa drives me nuts, folks. We can
All
be
the
talking
time.
Liverpool, Tottenham, and she's going, why aren't we talking about China? Guess what? Here they're talking about China.
That's the
this
reason
is
why I
the
care.
unspoken, the medical bet when the lockdown ends, what?
Yeah, and the lack of visibility into that, especially because the China delegation is not here. They are not here because of zero COVID. They are not here to represent and give some sort of intel about what's going on. How do you position going forward when that could be the potential swing option for what happens with the economy?
I'm going to combine two of our great bankers, our wonderful conversation with Brian Moynihan, which was, you got a wonderful, forget all this Fed chat, okay? He was like banker nerd, wasn't he?
Well, you
He was
basically
like,
walked him into that. You don't care about
of
Fed
course I
speak, do
did.
you? He's like, I guess not.
We
you know?
received, he's down in the mailroom every morning. How many
yeah.
checks did we get in?
Yeah, exactly.
And so, but you take Moynihan at Bank of America, very visible here, and Mr. Diamond in his 44-page love note, where they're just talking about hard work. And the other thing I think that's underestimated here is that every single company is going to adjust and adapt to the data that Michael Feroli's. I'm just not as negative as others because they're going to adapt and adjust as we move forward.
One conversation I had with a money manager who oversees a lot of assets said to me, the most bullish thing that I heard was all the pessimism. The gloom, just the uniform gloom, made me incredibly optimistic because frankly, it seems like we priced a lot in, but then you hear from other people saying, perhaps not. I don't know, a slew of
I'm in the
uncertainty.
camp. Jonathan Miller, I think he has got like 42 rentals on the island of Manhattan. He owns 3 homes north of Manhattan and 6,000 square feet
scare him away.
in Racket Lake. John Miller knows real estate, and he's living large with these prices right now. He's going to come back and tell you when real estate breaks.
Racket
Stay
Lake.
with us in Racket Lake, you portage, 20 miles. The black flies are like,
oh no, please don't remind me.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. One of the largest technology deals of all time will turn a chip maker into a bigger force in software. Broadcom has agreed to buy cloud computing company VMware for about $61 billion. The transaction represents about a 44% premium to VMware's valuation before May 20th. That was the last trading day before Bloomberg reported potential takeover talks. Today, Secretary of State Antony Blinken will deliver a long-awaited speech outlining U.S. strategy towards China, but there's unlikely to be any bold new direction unveiled. Instead, Blinken will explain existing policies. The U.S. strategy includes investing in democracy and innovation at home, bolstering allies, and competing with China on military and economic issues. Russia has cut interest rates for the third time in a little over a month. The central bank is hoping to stem a rally in the ruble and slashed its benchmark to 14%, or from 14% to 11%. Despite the sweeping sanctions imposed on Russia, the ruble has soared to the highest level since 2018. Surging exports and capital controls have hit demand for foreign exchange. And Alibaba reported a better than expected 9% rise in revenue in the March quarter. Chinese consumers turned to online malls for basic needs during COVID lockdowns. Alibaba is a barometer for consumer sentiment because of its dominance in Asia's largest retail arena. The company is grappling with intensifying competition and mounting economic uncertainty at home. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Housing market has been chronically undersupplied. It is a key challenge. It's a challenge that there used to be a housing platform around, but that platform was dismantled during the Great Recession, and it hasn't been completely restored.
Lights out at Davos. Neela Richardson, chief economist at ADP, was fired up about the American economy. That was a valuable conversation.
Absolutely, talking about the realities on the ground of people who are struggling with inflation and the housing situation, which is getting worse across the nation in terms of affordability.
Yeah, I was looking over here to see if the goats are gone. It's the Swiss Army's helping us out here, and they're tearing down as we tear on our last section in Davos. And of course, as we know, we can't afford anything in Davos to buy or rent. We might as well talk to Jonathan Miller, or eat. Jonathan Miller joins us, president and CEO of Miller Samuel, to tell us when housing's going to crack in America. John Miller, you would suggest we're starting to see an ebb. Is that because people can't afford the rent? They can't afford the mortgages?
Yeah, I think we're approaching a peak. I think rising mortgage rates are probably one of the best things that is happening to housing. In many ways, low mortgage rates are making housing less affordable because it has obliterated supply, whether in the rental market or the purchase market. We're seeing, I cover about 40 different housing markets across the U.S., and the market share of bidding wars right now is anywhere from 25 to 75% of all closed sales activity. That is not a sustainable condition. We need more inventory.
tell us about the mortgage rate right now. Are the people that did short-term mortgages at lower rates, are they already in trouble given that we now have higher and higher rates?
So it clearly places more pressure on them given how much prices have gone up over the last year. We're looking at, depending on the metric, around 20%. This next year, meaning 2022, more like 9 to 10%, and probably 3 to 4% the following year, even with the rate hikes. So all this is because there is limited supply. There's a firm underpinning. This isn't a financial engineering exercise that we had during the bubble. Credit conditions are still tighter than historic norms, and actually that's really pushing some people into the rental market, which is making it even less affordable.
Jonathan, how much is this a story of private investors and investment firms buying up a lot of the single-family homes and removing a lot of supply?
I think that certainly it's a factor, and it becomes more apparent when you're already in a situation right now where inventory is about is 1/3 of what it should be for sort of a normal, stable market. But I also think it's overhyped as a contributing factor. I think the bottom line is that rates have been too low for too long, and you have to think of inventory as this living, breathing organism that takes time to recover, and it hasn't had a chance, and that's causing price growth that's just the likes that we've never seen.
And Jonathan, this is the distinction as people talk about 5+% mortgage rates and the idea that the actual number of sales is slowing. The prices still are going up. When do we see prices peak, Jonathan, and how high do mortgage rates have to go?
So I think that pricing isn't going to. So I think it's more about the rate of growth that we're seeing. We've been seeing in the last year a rocket ship, basically straight up. I think we're going to see a moderation. Look, affordability has fallen by half since the end of the year. Mortgage rates are up 2%. I mean, that's a rapid, sudden change. And that's going to slow down transactions. What's interesting is before the rate growth, sales were already falling, but it was because inventory had collapsed and was restraining sales activity. Now it's a combination of both.
Jonathan Miller, too short a visit. Thank you so much for joining this morning with Miller Samuel here. And as we come back to New York, I mean, we're at a housing point now. It's absolutely extraordinary. We've got to, close the loop here on a number of items that we have. First of all, on the goat farm, there were some serious people thinking I was going triple leverage goat farm.
Yeah, I know.
And I just, I just decided the legal fees alone were just too much.
I think that you decided we should go to the triple leverage sheep farm because they are sheep, not goats. I think that's what.
I think we're high enough for
they
could be goats.
I'm sorry, they're sheep because they are chewing grass, not
This
leaves.
is what happens. There they are. Those look like sheep from here.
Let's hear your best sheep ba.
No, I can't do that as well. There they are. Those look like sheep from here.
Let's hear your best sheep ba.
No, I can't do that as well. Another big item we have is we have people here speaking English, and I can't understand a word they say. And Elisa's here. She's been helping us all week, and I didn't even know she was Australian. So on the break, I got a lecture, and it's just simple. It's not Melbourne like we say.
No.
It's
Melbourne. I can't
even say it. But she said I came close. It is Perth.
I know. You're going to be saying that for the rest of the year. Honestly, I think that this has been a really interesting Davos. I have been actually surprised at how serious people have been in terms of getting things done. And it's not just about paying lip service to different pet projects. It's definitely trying to roll up your sleeves and come up with where the financing is going to be.
Of course, all of us have maximum guilt about being away. It's like every night I'm just crushed at being away. So you got to buy by loot when you go home. And thank you, this really helped out. Structured Credit Dad emailed in, and he agreed with me. He says Brandy Melville was just like, you're not going to be buying that on the way home.
So is that the reason why you're mentioning this, to basically excuse why that will not be in the loot bag? So what is it going to be? Toblerone with Davos on it? Sephora's not any cheaper. Anyway, just saying. But
no, it is not at all.
I will say, I honestly have been really impressed at how things have gone, and now we're going to head back to New York City.
We're going to go back. We're in London tomorrow, looking forward to that. And then, you know, within Balance of Power and what Joe Matthew's doing over at Sound on Bloomberg Radio, we go back to a really sad story we have in America.
A horrendous story that has desensitized people, unfortunately, to what happens in schools. And honestly, that schools prepare for this.
We need to say thank you to the hundreds in Davos that have helped us. Queen Victoria helped us. Did Anastasia help us this year?
Yep, and the sheep farmers. Yeah, come on.
Okay.
Thank you to all of you.
Thank you to all.
Welcome back to another special Roland Garros update for Bloomberg TV and Radio from Tennis Channel. I'm Jamie Maggio. Two teams move on to the third round, but in very different ways on day 4 in Paris. Coco Gauff continued to carve her way through the draw with an impressive straight sets win over Alison van Uytvanck. After losing the opener 6-1, the Belgian found her range in the second, but the American had just enough to edge the breaker to advance. Up next for Coco, Kaya Kanepi. On the men's side, wonder kid Carlos Alcaraz came through a 5-set thriller against countryman Albert Ramos Vinolas. The Spaniard saved match point before taking it deep in the 5th after 4 hours and 34 minutes, the longest match of Alcaraz's young career. And don't forget, Tennis Channel's daily live coverage from the City of Light starts at 5 a.m. Eastern. I'm Jamie Maggio.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City for our viewers worldwide, in for John Farrow, I'm Matt Miller.
And I'm Kriti Gupta. Futures in the green, up 0.6%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Good morning, good morning. Big in with a big issue, looking for signs of capitulation.
We're clearly in a bear market. Long duration assets are taking on the chin right now.
The consumer narrative is starting to fall apart.
The pessimism out there is really remarkable. It's really widespread.
The market is, it's trying to find a bottom in here.
The question is what's going to form the bottom.
You get the economic reality of what happens in a leveraged system when the Fed is super aggressive.
There's a lot of certainty about what these central banks are going to deliver over the next couple of meetings.
There's a lot of good things happening. There's a lot of bad things happening.
I'm in Mike Wilson's camp.
We don't think we're going to get full-on capitulation. This is more of a drift lower.
We could see quite a bit more downside in equity.
A very sort of confusing cycle for some period of time.
I still think that the capitulation is to come. It's a challenge to try to catch a falling knife.
Joining us now, Hightower's Patrick Frazzetti and Winnie Caesar of Credit Sites. We are talking about capitulation and have been really for a few days. What are the signs we need to see before it happens? Patrick, why don't you give us your thoughts?
Yeah, sure. Well, I think the first thing you need to do is you have to pay attention when the market defies consensus. So, for example, the 10-year has come off now 40 basis points from the high. So bonds have rallied, and you'd expect to see a commensurate response in tech. And we just haven't seen that. So, I think you have to wait for more signals. Look, the bottom line is we're in a bear market. There's a change in leadership going on among sectors. I think that's going to continue for the foreseeable future. So, we're expecting to see, the market bounce around here for a while. I think you can be opportunistic, but there's definitely a shift in leadership going on in the market right now.
Winnie, hop on into this conversation here. What can we glean from the story in credit right now? If the stock market is looking to bottom, does that mean we have to look at the credit market to be at its absolute wides to get that signal for the stock market?
So what we have found in the credit markets relative to equities is the rate of change is what you need to be focused on. And credit has had two distinct phases of sell-off. First, it was all about duration as Treasury yields were rising, and that drove a massive spread widening in March for investment grade. Now we've seen a little bit of a lag effect with credit being the big concern. And so the rate of high yield spread change has actually picked up considerably in recent weeks. And for us, that's generally a pretty good leading indicator that we're going to continue to see spread widening. It should slow down. And that's a good sign that we're starting to get closer to the bottom in terms of equities and also the absolute wide for credit markets.
Of course, it's not all the same market. We've got a regional breakdown that is really meaningful, especially considering the invasion of Ukraine. Fidelity CEO Ann Richards expecting the volatility to continue. Take a listen.
I think, government bonds probably feel less volatile from here rather than credit, but it is still quite a challenging environment. And I think we've probably got another 2 quarters at least of volatility as we see the sort of economic backdrop gradually ease a little bit. And then we'll be looking towards the fourth quarter maybe to see a little more clarity.
Winnie, how much longer does this kind of volatility last?
Well, I wish I could say for certain, but it is absolutely true that when you have the Fed tightening monetary policy, particularly at an aggressive rate, you generally tend to see volatility in risk assets. We know now from yesterday's Fed meeting minutes that 50 basis point hikes are effectively foregone conclusions for at least the next 2 meetings. So I would say that volatility is probably going to be the name of the game for the next quarter or so. And then when we kind of re-rack heading into the fall, we should have a little bit more clarity around what the trend for a lot of economic and earnings data is going to actually be.
Patrick, come back in here because we do actually have a full screen quote here. Citi's Robert Buckland recommending investors start buying the dips. He wrote, for those investors concerned, it's too early to take the plunge in the United States market. Maybe buying dips in Europe and emerging markets is actually the safer call. Patrick, I have to ask
This is what I meant by regionality, by the way. So thank you for saving me with that.
You're welcome. Just for you, Matt. Well, Patrick, come on in here. If you don't buy into the U.S. market in this kind of face of inflation, this wall of worry, recession even, is the U.S. the only place to go?
I don't think necessarily the U.S. is the only place to go. I think, you have to focus on asset classes. You have to focus on sectors. So not necessarily just the U.S. Europe, if you're looking at a broad brush, I would not be looking at, the broader indices, whether it's the U.S. or Europe or emerging markets. So you really have to be selective, when you're looking across asset classes and across region. But, frankly, Winnie sort of alluded to this a little bit, but I would say if you look at, broader, the largest U.S. issuers, right? They have anywhere from 25% to a third of their revenue overseas. So the stronger dollar has actually been a bit of a headwind for them. So if you start to see, I think you may see some easing in the credit markets if the dollar begins to weaken. We haven't seen any signs of that. I do think, we will eventually see a weaker dollar. Just if you look at the percentage that the U.S. has of total global GDP, I think typically the dollar has followed that over the years, over many cycles. So I think at some point in the foreseeable future, you see a U.S. dollar weakening. Perhaps that relieves some of the credit spread pressure.
Patrick, when you stick with us, investors are looking for those signs of capitulation despite those mixed signals. We're looking at NASDAQ 100 plunging 30% from its peak, the 10-year hitting its 1-month low, and a VIX that's still holding on. The question is for how long? For more, let's bring in Bloomberg's Kaylee Lyons. Kaylee.
Well, Grady, we have seen so much damage done already this year. Literally trillions of dollars worth of market value has been eviscerated from this equity market, and a large part of that has been from those mega cap companies, which collectively have seen more than $3 trillion in reductions to their market caps. Apple, for example, was worth around $3 trillion. Now it's about $2.27 trillion. Microsoft from 2.5 down to 1.96 trillion. The list goes on and on. You really can get the gist here. And after all of that bleeding, the question which you guys are raising is, are we there yet? Have we seen full capitulation? Is the worst over? Looking for some hints of that potentially is in the fund flows. After 5 weeks of outflows, money is coming back in to the 2 largest funds tracking the S&P 500. It has been for 3 weeks now. And another clue is in hedging activity, which is starting to calm down. People aren't buying as much downside protection. One of our great colleagues over on the MLive blog was taking a look at skew on the S&P 500, which is essentially the relative cost for hedging for further losses over gains. That has fallen dramatically. One explanation, they see investors already have done all that de-risking. The other hand now, maybe because concern has shifted from inflation back to growth, that means we've seen peak hawkishness from the Federal Reserve, Creedy.
Kaylee, thank you. Winnie Caesar and Patrick Frusetti are still sticking with us. Patrick, let's stick with that topic of capitulation, because it kind of seems like capitulation, or the idea of it, goes hand in hand with a stock market bottom. But is that necessarily true? Does everyone just have to throw their hands up and give up in order for the stock market to rebound?
I think it's always a good sign when you see it. I'm not saying we'll necessarily get it, but I think typically it's a good sign when you see it. We haven't seen it yet. And I think actually, one of your Bloomberg contributors, I don't know if he coined this term, John Authers, he said, we're starting to see the market recognize there are growth traps. Everyone used to be focused on value traps, but if you look at companies that were really in this sort of growth bucket, that disappointed on revenue over the past year and, reduced revenue guidance, they've just got completely crushed by the market. We have to keep seeing those types of events take place. It's sort of a clearing of the deck. So again, it doesn't mean capitulation, but if we see it, that would be a good sign to see at least an interim bottom.
Do you see, Winnie, do you see kind of the reverse happening in credit? I mean, are people running for safe haven trades at a level that you haven't seen in the past few years?
So I would say that people are running back towards the longer duration, higher quality trades at a pace more rapid than earlier in this year, at least. We've seen strong outperformance from investment grade and the long end of the curve recently, whereas high yield has taken a little bit of a backseat. And I think this goes to the kind of phases of economic reopening and monetary policy, where now we're starting to see that shift away from duration-fueled concerns and back towards credit-fueled concerns. And I think this is a little bit misplaced. We're still fairly constructive on a lot of the riskier parts of the credit market because adjusted for what's going on in the global economy, these parts of the market actually look fairly attractive.
I mean, to Critty's point, we don't necessarily have to wave our hands in the air like we just don't care. Do you see, if everything is priced in from the Fed and in terms of, say, lockdowns lifted in China, is it then not necessary to see capitulation?
I think that instead of capitulation, what you're going to see is a renewed focus on single name and idiosyncratic stories, because credit fundamentals will matter again as we see China reopen and more dollars come into the economy, growth start to take up again in different sectors than the ones that were really the COVID pandemic's darlings. And so understanding where you're going to see support for margins and inflation not necessarily eating away at profitability and changing consumer trends is going to be key in terms of credit selection, whereas capitulation is a little bit less relevant to the credit markets, at least over kind of a longer term investment horizon.
Winnie Caesar, Patrick Fruzzetti, they are sticking with us. Joining us now, though, with a look at the stocks moving ahead of the opening bell. Here's Abigail Doolittle. Abby.
Hey, Creedy. Well, we do have stock futures up slightly, but we have a few laggards to take a look at, including the biggest weight to the index is Apple. Bloomberg has learned that Apple plans to keep its production flat this year. They've asked suppliers to assemble 220 million iPhones, the same as 2021. NVIDIA, the chip maker, down 4.2%. The quarter that they reported was okay, but their guidance points to 40% bottom line growth. That sounds pretty good relative to most companies, but relative to NVIDIA's 90% growth a year ago, not enough. Snowflake down 10.1%. The software company says growth is slow. And then Macy's popping sharply higher, up more than 13%, bucking the bearish trend that we've seen in retail. They beat. They also boosted the outlook on special occasion retail clothing, and then strength for high-end Bloomingdale's and Bluemercury, consistent with the strength that we saw for Nordstrom. Now, relative to deals, VMware is up slightly. This, of course, on the confirmation that Broadcom will be buying the company for $61 billion. The 40% owner, Michael Dell, is getting $24 billion. Twitter popping up 4.7%. This as Elon Musk has dropped his plans to partially fund that Twitter buy with a margin loan tied to Tesla. And Tesla, not surprisingly on that news, is up more than 1%.
By the way, Abby, Broadcom still uses the AVGO ticker.
Yes, and that just confused me for a moment.
I think it was like a $37 billion purchase 5 years ago. If you're going to spend $35 billion or $37 billion, you should change the ticker.
Well, I think that was a part of that deal, the reconciliation. It's always about the negotiation.
I see, they had to share.
Yes, they had to share.
Got it. Okay, Abby, thanks very much. Abigail Doolittle there. Coming up, global central banks grappling with surging inflation.
Over the period that matters to us, the more work that other central banks do on behalf of global inflation, the easier the job is for us. It's a job shared.
The Fed's fight taking center stage. That conversation still ahead.
black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
As far as the cost is concerned, we have a kind of a perfect storm, because it's not only the coffee due to climate change, and you have packaging due to the general situation, and then you have energy as a consequence of the war, and then you have shipping costs as a consequence of the COVID, let's say, logistic troubles.
Rising costs continue to weigh on companies and consumers, and the Federal Reserve is not pausing its fight against inflation. The latest FOMC minutes saying, quote, most participants judge that 50 basis point increases in the target range would likely be appropriate at the next couple of meetings. Many participants judge that expediting the removal of policy accommodation would leave the committee well positioned later this year to assess the effects of policy firming and the extent to which economic developments warranted policy adjustment. Joining us now for more is Bloomberg's Michael McKee. Mike.
Critty, a lot has been made out of the minutes yesterday, but the most important point to remember is this was 3 weeks ago. This is 3-week-old data. It was a discussion that they held before they announced their vote and before Jay Powell came out and gave his news conference. So there was nothing really new in it at this point. Fed officials have said much the same since, that they're going to do 2 50 basis point moves. They'll go past neutral to restrictive if they have to. The one thing that might be a little bit new is that line you talked about, the assessing data later in the year. Maybe there's a pause or change coming this year, so that might be a teensy tiny bit more dovish. And here's why. The minutes taught language about being well positioned. Earlier this week, Raphael Bostic, the Atlanta Fed president, suggested that maybe we want to pause at September and see where we are. And here's why. You can see there new home sales, the stock market rolling over as financial conditions, the yellow line, tighten significantly. That's what's supposed to happen, but maybe financial conditions, some are saying, are tightening faster than the Fed thought, and by the time we get to August, they may want to rethink whether they need to keep doing 50s. I wouldn't bet one way or the other, but be open to that possibility. And of course, Jay Powell has said since the meeting, we're not going to stop until we get clear and convincing evidence inflation is slowing. So here's what to watch. Some big dates coming up tomorrow. We get the PCE index. That's the Fed's favorite measure. ISM prices paid next week, and then of course CPI and PPI. And once we get through all those, we can reevaluate, and the Fed will reevaluate what happens next.
All right, Mike, thanks very much. Michael McKee there giving us the overview. Winnie Caesar is still with us, as well as Patrick Fruzetti. Winnie, what did you take from the Fed minutes? I mean, it seemed like they were saying we should set ourselves up for the possibility of having to cut down the line.
So I'm not sure that they were necessarily setting themselves up for a cut, but I do think that they were acknowledging they have the most air cover to tighten financial conditions in the kind of short, immediate term. Inflation has likely already peaked. We've probably already seen that peak CPI and PCE print, and we have seen an aggressive tightening of financial conditions ahead of the Fed actually making any moves. We also have the QT program about to kick in on June 1st, and taken together, once we we get to Q3 and Q4, I think the Fed is at least going to have to take stock of, how much has the preemptive tightening of financial conditions actually started to weigh on the global economy.
Patrick, hop on in here, because I feel like one of the major parts of the FOMC minutes I haven't really seen a ton talk about is that they were actually quite confident going into the second quarter that it wouldn't be as drastic of a slowdown as the first quarter. They were actually perhaps, I don't want to say bullish, but more positive, more optimistic on what those second quarter growth results were really going to be. Is that perhaps what the market is responding to, given they've been trading on those recession odds?
Yeah, I think the market is responding to those comments. Now, whether or not it actually ends up the way the Fed would like, right? I mean, the soft landing, all of that talk, like the Fed's not going to be able to stuff the genie back in the bottle, right? It's very difficult to do. And so, they can't control goods inflation because of the structural challenges that they're faced with. At the end of the day, this is going to hurt the consumer. We've seen it in mortgage rates. I mean, mortgage rates now, if you look at, the average monthly cost of a mortgage, relative to monthly income, it's now at roughly 58% of monthly income on average. And, between 2010 and 2019, that 10-year period, it was around 36, 37%. So that's gone up substantially. That's going to put pressure on the consumer. We've seen that flow through to earnings expectations going forward. And anywhere where you've seen these growth projections, in the last segment, you mentioned, a company like NVIDIA growing at 40%. Well, that's below 90% of last year. So the stock gets hit. So you're going to continue to see those types of things, as we go forward in the coming quarters.
Well, I'm glad you bring up the mortgage payment issue, because Cameron Kreiser wrote a great piece about that yesterday, Patrick. And he pointed out that the average mortgage payment now for, across the U.S. is about $1,800. And a year ago, it was $1,100. Now, he says 30% of that came from increases in price. We've all seen housing prices soar, but 70% comes from the increase in the mortgage rate. Are you concerned at all about the housing market as it, in respect to the stock market? Anything like we saw in 2007, 2008?
I don't know if I'm so concerned, about the housing market, relative to 2008. I mean, that was probably, the worst, we'll see for the next 50 years. It's my expectation. But frankly, that doesn't matter. What matters is what the impact on the consumer is, right? Structurally, the housing market is still undersupplied, right? So, I don't know if you're going to see a collapse in prices just due to mortgage rates going up, but it will have the impact on the consumer. That's the most important piece, and how that flows through the broader economy. The Fed can try to talk down inflation as much as they want. I think it's still going to be nagging for the foreseeable future, and that's something that the economy is going to have to digest, and ultimately the market will reflect that. So again, maybe the market's been responding positively to those Fed comments. I don't think there was a lot new in there, but we'll see over the next few months how the market responds.
All right, Patrick Frazzetti, thanks so much for sticking with us. Winnie Caesar, always great to hear from you as well. Thanks very much. Coming up, the morning calls, and we're going to later talk about Credit Suisse, Credit Suisse equity strategist Jonathan Golub. I don't know if you realize this, but he used to be in I had a motorcycle gang.
Did you?
With Jonathan Golub.
And who else?
Binky Chadha was in the bang, Tobias Lefkovich. So
was this a motorcycle gang, or was this like nerd prom?
It was a gang. We were going to make leather vests with patches on the back. We can talk to Jonathan about it.
We should. I'm still waiting for my invite, but it's fine. You don't have to take me. I think you should, though.
Well, you can get on the back of my hog. Jonathan Golub coming up. This is Bloomberg.
accelerating into a digitized and decentralized future.
That is why Bitcoin is here. The cryptocurrency market has roughly a $3 trillion market cap. That's a huge milestone.
This is the largest, fastest wealth creation event in the history of the world. And financial institutions have only now just figured this out.
It is a power to the people kind of technology.
However, we are still tied to the centralized banking system in a way that is unnecessary.
The crypto sector today is largely unregulated.
This is a little bit like the American Wild West.
Essentially what DeFi is like a big casino.
That's scary to the JP Morgans because they're seeing all this growth and they're left out.
You all can do whatever you want and I don't care.
We're seeing a revolution unfold right now. These are historic times.
Buckle your seatbelt. This is where the ride gets really interesting.
You will put a woman on Mars. You will be the first chief crypto officer, because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
In the green, futures higher by 0.4%, almost. But take a look what's outperforming. It's not tech. Tech is not leading this market higher, at least in pre-market. It's the Russell 2000 that was actually outperforming. Look macro, though, and you can also see not a ton of movement in the 10-year yield. In fact, a lot of the movement coming from the dollar. You are starting to see a lot of unchanged when it comes to 10-year yield in the dollar, but lately they have diverged. What are the implications for the macro picture, and specifically for the stock market? Is tech responding to yields, or is tech responding to that foreign bid, which of course makes the dollar far, far more relevant? So keep an eye on this relationship. Let's go from macro to micro here and look at some of those morning calls and look at some of the analyst recommendations on Wall Street this morning. First up, Jefferies cutting his price target on Tesla down to $1,050 a share. The analyst pointing to a growing list of negative headlines. Those shares up about 1.3% in the pre-market. Next up, Morgan Stanley upgrading Lululemon to overweight. 303 is the price target. The analyst recommending long-term investors jump back in following the stock's recent declines. And of course, you already have that bid up about 4.6% into those shares. And finally, UBS downgrading Kraft Heinz to sell with a street low price target of $34. The analyst forecasting significant inflationary headwinds over the next year. And this is going to be a major topic, Matt, as we simply talk about how long this inflation really lasts and how long they really eat into those margins.
Yeah, absolutely. Love it. Love the energy, Critty. You know, this could be, if we have an up day, the first back-to-back day of gains that we've seen in like 4 weeks' time. Coming up, it's the opening bell with Credit Suisse Chief Equity Strategist Jonathan Golub.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife. Come here, let me show y'all something.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is the countdown to the open. I'm Matt Miller in for Jonathan Farrow. Moments away from the start of trading on Wall Street, you can see I-80 Gold Corp about to ring the bell at the New York Stock Exchange. MSP recovery at the NASDAQ. Bloomberg had an amazing story about the amount of billions lost by MSP recovery in the first few minutes of trading on its debut. Right now, we're looking at gains, though, on the S&P futures, up about 1/3 so expect to kick off in the green on the S&P. The NASDAQ futures down about 1/4%. As Critty said, it's not tech stocks leading the way today, which may be a bummer. Russell 2000 stocks are up in futures. In terms of the euro dollar here, 106.99, not a lot of movement there. The U.S. 10-year yield coming down again for the third day in a row. Monday we were up at 286. Now we're looking at 274. And NYMEX crude continues a climb higher at $112 and change for Texas Intermediate. We're looking at Brent, the global benchmark, at about 115 right now. Joining us with a look at the stocks moving at the open this morning is Abigail Doolittle. Abby?
Well, Matt, we do have a bit of a mixed open here, but let's start out on the positive, and that, of course, is Alibaba. Shares are popping sharply higher this after the online giant in China reported a much better quarter than expected. They beat sales by 1.7%, profits by 12%, and so interesting here is that they were helped out by lockdowns in China, basically consumers stuck at home using the company as an online mall. Southwest Airlines up 2.3%, similar to United Airlines. They raised the revenue outlook, and in this case by about 3 to 4% on strong demand as folks really want to get back out there and traveling, a experience desire out there. Apple, on the other hand, this is the big weight on the NASDAQ 100, back below its 100-week moving average, down 2.2%. This, of course, as Bloomberg has learned that they plan to keep iPhone production held basically the same, ordering 220 million iPhones for this year from their suppliers, so investors not loving that. And then NVIDIA well off of the lows relative to when they first announced yesterday. The quarter was okay, but the outlook not quite as strong. And interesting, Critty, is the fact that while the lockdowns in China helped out Alibaba, in the case of NVIDIA, it's a big headwind as for why the growth is less than what some would have liked.
Yeah, we're certainly going to be watching that and really stick to that tech theme. Abigail, thank you as always. Broadcom, speaking of tech, agreeing to buy VMware for, get this, a $61 billion, marketing the biggest ever takeover for a chip maker on record. Bloomberg's Alex Webb joins us now from London with the details. Alex, can we really call them a chip maker, just given how diversified Broadcom is?
Well, that's very much the point of this deal, that Broadcom comes into it with about 70% of revenue coming from semiconductors. If this deal completes, it'll be 50% in software and 50% in semiconductors. And that's significant because semiconductors are exposed to a huge amount of cyclicality. That's not only a function of supply chain issues, where we've seen a huge number of problems over the past 18 months, 2 years, but also consumer demand. That if the iPhone, for instance, they lose a component in the iPhone, or the iPhone demand itself isn't that great, then that would hit Broadcom. And then operationally, there are also some advantages too, namely that VMware makes virtualization software, the ability to access computers remotely. That plays very nicely with Broadcom's burgeoning data center business. Now, the issue is there's a huge amount of money going here. Whether they can extract some real savings from it, there's about $8 billion in operating expenditure, and that's what's going to be in the sight of Hock Tan, the CEO, as he tries to extract some savings.
Ton of moving parts, but obviously a huge deal. Alex, thanks very much for covering that for us. Alex Webb on tech. Let's get to another tech deal that hasn't happened yet and has taken a number of unexpected turns that are almost annoying. morning. Elon Musk revising his Twitter bid again, dropping a margin load tied to Tesla and increasing the size of the deal's equity component. Bloomberg's Ed Ludlow joining us now from San Francisco with more. Ed, is he really going to do this? Is he serious?
Well, I think that Twitter shares being up 4% is a market indication that we think he is going to do this. The rebalancing as well, that is a de-risk for everyone, right? The margin loan component was already cut from $12.5 billion to $6.25 billion. Now he's removed that element entirely. There's still $13 billion of more traditional forms of debt, but $33.5 billion in equity that Musk has to account for. But you see Tesla shares higher by 0.6%. The idea being that with the decline we've seen in that stock, there weren't going to be enough unpledged Tesla shares to act as collateral to secure that margin loan anyway. In the filing that dropped late on Wednesday after the shareholder meeting, it outlined that Musk is talking to some existing investors about rolling over their public shares into a private entity, including Jack Dorsey. You'll remember that he already has pledges for $7.1 billion of equity financing, including Larry Ellison, Sequoia, people like that. The question is, how much more outside equity is he going to raise as part of that $33.5 billion tranche? What you see on your screen is the spread, right? Where we're trading right now on Twitter stock relative to the $54.20 per share offer. When I was standing outside Twitter HQ on Wednesday, Matt, merger arbitrage specialists, investors had a lot of doubts that this deal would happen at all, or they would think that he'd come back in at a lower price point. With the filing, a little more confidence this Thursday morning.
Yeah, it seems to be fueling the shares as well, especially as we see perhaps if that deal does go through, do the share prices go back at least closer to that 54.20 level? Ed Ludlow, thank you as always. Let's talk about some more stock stories here. Macy's joining Nordstrom and offering a little bit of relief after last week's disappointing retail earnings results. The company lifting its earnings outlook on strong spending despite the inflation. The CEO writing, quote, "We saw a notable shift back to occasion-based apparel and in-store shopping, as well as continued strength in sales of luxury goods." Bloomberg's Kaylee Lines is back with us for more. Kaylee.
Yeah, Cree, I think that commentary from the statement is so telling because they said, yes, macroeconomic headwinds have increased, but at the end of the day, our consumers are still spending. That is what enabled them to raise the high end of their earnings forecast for the full year out to $4.95 a share. It previously was only $4.52. It really highlights the difference between the high-end consumer that is still spending in the face of inflation and the lower-end one that is starting to pull back on some of those discretionary purchases due to higher prices, as we saw with Walmart and Target. Of course, that same dynamic is reflected in Williams-Sonoma, which topped sales expectations. It, of course, is a high-end retailer of home products. It's up 11%. But what's interesting is even in the face of some of these inflationary pressures, the dollar stores proving resilient, both Dollar General and Dollar Tree lifting their forecast, those stocks up by double digits early on. But of course, while we're getting a nice boost for all of those names this morning, it has been a very different story for retail on the year thus far. Apparel and general merchandise stocks each down about 24% year-to-date. Department stores a little bit better, but still down about 18.5%. Clearly, there has been a lot of concern about how these companies are faring in this inflationary environment and what kind of pricing power they are able to exercise, passing on some of their higher input costs. Now, some of that pressure could be starting to ease as you've seen the prices of some commodities like metals coming down and freight rates coming in as well. And of course, we see that reflected in break-even rates, which is the market's gauge of expectations for inflation over the next number of years. We have seen those coming in dramatically in recent months as well, Matt.
All right, Kaylee, thanks very much for that. Kaylee Lines there with a look at inflation expectations. Let's bring in Jonathan Golub, Credit Suisse Chief Equity Strategist, to talk about what we should expect in terms of inflation, in terms of the Fed, and really in terms of capitulation first, Jonathan, because that's been kind of the conversation. Do you think we've seen it, or do we not need to see it?
You know, Matt, as I'm looking at this conversation about inflation expectations coming down and the tips break-evens, which is really pretty startling. There's a couple of things that are interesting. If you look, and I love this, on my Bloomberg terminal, if you type in ECFC, you can see what the economists' forecasts are for inflation expectations for this year or next year, what have you. And those numbers continue to ratchet higher. So you really have like this battle between the economists who say this inflation issue is a bigger deal and investors who are putting real money to work who are saying perhaps this inflation is falling off. And at the same time, you have oil prices are ratcheting higher. and they almost always move with the break evens. So this question about, at the starting point of the whole debate is what happens to inflation. It's really murky. Now, we believe that the economists are more likely to be right, that the inflation is going to be stickier and harder to kill, and it's going to force the Fed to do a little bit more. But it's a pretty murky, question.
Jonathan, I'm curious about what the stock market is actually trading on. We were talking for a while about yields, about the dollar, about oil even as this inflation hedge, and then it became kind of this operating margin story, now valuations. What is the metric that the stock market is using as its signal?
It really is, we've done a bunch of analysis on this. It really comes down to this valuation issue more than anything else. At the beginning of the year, it wasn't that the stock market itself was so expensive. It's that the high growth companies, high PE, the high, price to sales companies were really in the stratosphere. And our big call for this year was not that the market would have a good year or a bad year, but that these high flyers were going to have to correct. I didn't really, at that point, know whether it was that the winners were going to come down or the cheaper stocks were going to rise up. But boy, when interest rates spiked, it was the catalyst rather than the cause. And now we're finding, if I use a baseball analogy, we're probably in like the 8th inning of the kind of correction that we needed to see in these very, very expensive names. So we think that maybe not all of the carnage is over, but if it's not all over, the vast majority is.
Yeah, I mean, a lot of people are saying, look, the pendulum often swings too far, right? I think we're trading around 19 as a PE on the S&P 500, closer to 40 on the NASDAQ, but those are back to more historical valuations, right? The NASDAQ has a lot of companies that don't make any E, so the P is relatively, so that ratio is relatively meaningless. Do you start, if you have cash to invest now, do you start to get in if you have a longer term outlook?
Yeah, I think you have to. I mean, if you take a look, first of all, Matt, we're not looking at the valuation of the market. We're actually looking at the valuations within the market. So what are the most expensive stocks trading at compared to everything else? And that was really what was crazy out of whack at the beginning of the year. And that is much more normal. So the market internals are feeling really pretty healthy. Also, year to date, the earnings picture is up by about 6.5%. What I mean by that is if you looked at what the forward earnings expectations were on January 1st and you look at them today, you're 6.5% higher on that earnings outlook. So it looks pretty healthy. So stocks are cheaper. Earnings outlook is pretty good. The earnings revisions, that's how much the analysts are adjusting their numbers. Those actually keep ratcheting higher because for all of the noise and everything else, the economic backdrop is still pretty supportive for profits.
All right, Jonathan, thanks very much for joining us. Jonathan Golub there from Credit Suisse. It's pretty interesting. People are watching for capitulation using a number of different measurements, as you pointed out. We're looking at the put-to-call ratio. If it gets above 135, 140, then that could be a sign. We're looking at the VIX, but it needs to be around 40 or 50, and right now we're only seeing 28. So it doesn't look like we're close to there on pretty much any measurement.
Yeah, and remember, we had weeks and weeks of it was just selling nonstop, red on the screen day and day after, and now we're... Sorry?
7 weeks.
Yeah, exactly. Yeah. And you had this massive streak, and now it's kind of flip-flopping. So there are some signs, as we talked about with our guests, about it bottoming out. But I have to ask, there's also a pretty big case that the stock market selling continues, that this is just a brief bounce. And I'm curious as to how do you navigate that if it's just going in a one-way direction?
If that's the case. Now, I also suspect that a lot has been priced in already, including, for example, what we expect from the Fed, including also what we expect from inflation. So it'll be interesting, especially to see the PCE number that Mike McKee was talking about tomorrow. Coming up, COVID lockdowns continue to weigh on China's recovery.
There's no doubt that the fight against COVID in China has had an impact very short term on the Chinese economy, but China is very determined.
That conversation coming up next. This is Bloomberg.
Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There's no doubt that the fight against COVID in China has had an impact very short term on the Chinese economy. But China is very determined and seems very convinced that they will be able to meet their growth targets. And they're not right now accelerating their infrastructure investments. And when they're accelerating infrastructure investments, it's good for iron ore demand.
After months of anticipation, Secretary Antony Blinken's long-awaited China address is just moments away. Delivering remarks at the top of the hour, he warns of Chinese dominance in released experts, reading, quote, China is the only country with both the intent to reshape the international order and, increasingly, the economic, diplomatic, military, and technological power to do it. Bloomberg's Anne-Marie Hordern joins us now from Washington. Anne-Marie, what do we expect?
Hey, Matt, well, we're not going to expect anything in terms of any bold new initiatives. Likely, a lot of this is going to be highlighting what the administration has been doing, even though for months they've been talking about what their policy towards China is. Another excerpt that we know that Secretary Blinken will deliver when he gives this speech is that he's expected to say that under President Xi, the ruling Chinese Communist Party has become more repressive at home and more aggressive abroad. We should note this speech just comes days after the BBC released thousands of images of detained Uyghurs, some of them also under the gaze of baton-wielding guards. So there likely will be a human rights component to this. But when it comes to the strategy the administration has been using and what they are going to really market in this speech is 3 ways to deal with China. 1, invest at home, things like the CHIP Act that Congress is trying to get over the finish line, bolster their allies and align with like-minded individuals in the Indo-Pacific, and then finally be able to compete with China economically and militarily.
I have to ask about the tariffs of this all, because as we talk about China, what comes to mind is the Trump-era tariffs that are still in play. President Biden saying that perhaps they would consider removing it. What's the latest on that front?
So President Biden, while he was in Japan, has said that when he got back to Washington, he'll be sitting down with Secretary Yellen, and this will be under discussion. He said this a few times. So because inflation is so high, many economists have said this could potentially one lever the administration could pull to bring down inflation. The Peterson Institute and others have said that. But there is a group of senators, bipartisan, from Mitt Romney to Elizabeth Warren, signing a letter yesterday saying do not revoke revoke these tariffs. They think that, one, it'll be bad for jobs in America, but also what does this send as a statement to China? So this is politically difficult, but also economically a difficult place for the administration. This is something they're going to be considering, but top officials say this kind of review of these tariffs will take months.
Anne-Marie Hordern from Washington, D.C., we thank you as always. Well, speaking of those concerns that Anne-Marie was just talking about, it seeps into the company story as well. China's COVID lockdowns weighing on the largest U.S. chip maker, NVIDIA, tumbling after reporting a disappointing revenue outlook. Meanwhile, Alibaba reporting better than expected revenue, and actually looks like NVIDIA came back up, but it was certainly down in the pre-market. Bloomberg's Kaylee Lyons is back with us. Kaylee, break it down for us.
Well, Creedy, this really highlights the uneven impact of COVID zero policy. On the one hand, NVIDIA, as you say, came up short in terms of its revenue guidance. The issue is not demand. The issue is its ability to meet that demand, given some of the supply side challenges stemming partially from the war in Ukraine and sanctions on Russia, but in large part also because of COVID-related lockdowns in China. That hampers their ability to produce the chips that they need to. For Alibaba, though, the e-commerce giant in China, it's a very different story. Actually, everyone staying at home is a boon for this company. Revenue was up 9%. That was higher growth than expected as consumers turned online for basic needs as lockdowns spread across the country. And it also was a signal that the consumer is still spending, which maybe lends a little bit of optimism to the growth story in China more broadly. Though, of course, due to that uncertainty around COVID and its trajectory, the company did not give a full year revenue outlook. And obviously, Alibaba is down about 57% over the last year, because that's not just about COVID zero. It is also about the regulatory overhang for these Chinese tech companies. And that is not limited, of course, to Alibaba. The NASDAQ Golden Dragon China Index is down about 29% year to date, JD.com by about a quarter, and then DD Global off by 63%, though part of that story is a delisting one. There's still a lot of debate around delistings of these Chinese companies listed here in the U.S., auditing rules. Those two countries still debating that. That's kind of a whole other ball of wax, Matt.
Yeah, definitely a double whammy there. So much hanging over a number of Chinese stocks. Kaylee, thanks very much for that. Coming up, the market-moving events that you need to be watching. We're going to give them to you next in our trading diary. In terms of the markets right now, you can take a look at what's going on across the boards. Equities are up 1% on the S&P 500.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
It is now time for our trading diary. We're going to get to those things that you need to watch in just a moment. First off, S&P 500 up 1.25%, NASDAQ gaining 1.33%. So this is the NASDAQ 100, but actually the tech stocks look to be doing okay today, right? The Russell 2000 is still a leader. As Critty was saying earlier, that's going to be front and center, but tech stocks aren't doing poorly, right?
They're not doing poorly. It's a momentum trade to me. If you have tech up, you have Russell up, it's momentum.
All right, that's what she's here for. Time now for your trading diary, what you need to be watching this week, and there's only a couple days left. Secretary of State Antony Blinken speaking on policy towards China in just about 5 minutes' time, or at least that's when he's scheduled to. Fed speak coming out from Vice Chair Lyle Brainerd at 12 p.m., so get ready for that at noon. Then the Treasury is going to sell $42 billion of 7-year notes at 1 p.m. That'll probably happen without you even noticing it. We're going to get personal income and spending data tomorrow. Tomorrow, there's going to be a ton of cool data. We're going to have housing data as well. Rounding out the week, the University of Michigan Consumer Sentiment Survey. This pains me, Critty, as you know, because...
Why? Do you have low consumer sentiment?
I hate the University of Michigan.
Oh.
I'm a Buckeye. But I guess it doesn't mean very much to you or anyone else, frankly.
No, I get it.
It's very important to see how the consumer feels right now because we're so worried about a slowdown, stagflation, a recession, and that has so much to do with it in this economy, right?
And speaking of the housing data you just mentioned, I mean, I feel like I was surprised that you didn't even mention that you just bought a house. This is important.
At the very top of the market.
Very top of the market.
At the very top. And
it's
now
a clear point of pride with you.
Exactly.
But I think it's important when it comes to the slowdown. We're talking about a housing slowdown here, but if you actually look at the housing market, that supply-demand imbalance is still pretty extreme.
Right, and that was actually Cameron Kreis. I keep going back to the column that he wrote yesterday because I think it was so brilliant. The point that he made is in 2007, 2008, when demand dropped, supply was still ramping up like crazy, and we don't have that now. There's really no supply out there.
Yeah, and I think it's also hard to talk about it regionally because what you're seeing in New York City might not be what you're seeing in, say, Oklahoma, for example. So the national housing story is a fascinating one.
Oklahoma. All right, this was the countdown to the open. We're in for John Farrow. We miss him. This is Bloomberg.
Was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
I won! Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their